Good morning, everybody. Happy hump day. Hope you guys are having a fantastic morning so far. Possibly better than mine, hopefully. How's everybody feeling? Arctic Box Alaska. Grant, good to see you, Grant. Germ Corp, Huta Morgan. Ron D, good morning, Ron. Good to see you. Good to see you, buddy. GTA in the house. Ace Lee, grumpy old man. How we feeling, guys? Let me know if everything's running okay here. Everything's good. Low Key, what's up, Low Key? Great to see you, my friend. So, Powell is all the talk. 1:30, we get Powell live. We should have him here. I have to pick Nikki up at 1:52. But I'm gonna figure out a way to bring it in. So we'll have that live, even if I gotta start it a little bit premature. Oh yes, Junk Savvy, Sabrina. Two of my favorites. Great to see you guys. It is hump day. Started out with a hump day. It's raining in my kitchen right now. Caesar C, what's up, buddy? Good morning. So excuse me. What's up, Ace Lee? So we were green in the we were green when I woke up this morning. No more. Not too so we get pending home sales data. When does that come in? And the ADP data. Let's see what CNBC says. 5 things to know. Rate hike watch, obviously. Oh, Tesla's market share shrinks. As the electric vehicle market gets more crowded, Tesla's dominance in the U.S. is eroding. The company's cars accounted for 65% of new registered EVs through the third quarter, down from 71% last year and 79%. Yeah, but if market share's declining as the market's increasing, yeah, so despite the declines, Tesla's sales volume is still expected to increase in coming years as EVs grow in popularity. So I think that's a big no news. Railroad strike. Joe Biden called on Congress to intervene after talks stalled between railroads and 4 unions over paid sick days. Biden has said he's reluctant to override the union's vote against the contract, but that a rail shutdown would devastate the economy. And so what does that mean if they are to step in and override union's decision? Is this a one-off? Is this a one-time thing? Is this a sign of things to come? Is it something we should be worried about? I think those are all legitimate questions. Kroger Albertson, CEO, was in the hot seat. Did that already take place? They were supposed to appear in hearings. So the CEO has faced a series of questions at congressional hearings about how their proposed merger might alter the competitive landscape and the prices that consumers pay at the store. Blah, blah, blah. Oh, hope for BlockFi. Who's going to step in? Lawyers for crypto lender BlockFi expressed optimism that the firm is in good position to salvage its business. A day after filing for Chapter 11 bankruptcy protection, BlockFi lawyers said at a court hearing Tuesday that the company plans to reopen withdrawals as part of an effort to maximize client recoveries. I'll believe it when I see it. And that's what they want you to know today. Good morning, Mr. Santa. Rick Cogswell, what's up, buddy? HYMC, yeah, I've seen that news. HYMC. Debt reduction, especially in this day and age, not a bad thing at all. Not a bad thing. In fact, the complete opposite. Oh, so we got good GDP numbers then. I knew I was forgetting something. Germ Corp, thank you, buddy. Let's see. So the November 2022 survey of current business, let's see, the updated estimates show that the real GDP increased at an average annual rate of 2.1%. Oh, okay, so that's old news. My bad. So GDP went up. How does that play into? Does that encourage them to? How does that play into JPOW's decision, if any? Congress has the constitutional power to stop a strike under the Commerce Act. They can force a deal. Well, yeah, that's what it's. Again, I don't follow unions as much or that until something like this comes about. You know what I mean? That's really really going to affect things. Not that other union strikes wouldn't. I'm not saying that at all. I've just never had skin in the game, I guess is what I'm saying. Sentinel announces support for Amazon Security Lake to power cloud investigations. Interesting. And speaking of cloud, was it Salesforce? No, who was it that had earnings yesterday? Not Salesforce. I'm sorry, guys. CrowdStrike. Their earnings, they tapered. I don't think it was the earnings that were so bad. It was the expectations moving forward. And then you've seen a bunch of price targets, but we've seen that is down 17% at 114. Whew. Okay, that's what I assume, Germ Corp, that it's more reason, but at the same time, so if they does it negate the reaction to the rate hike? You know what I mean? Because at least if there still are rate hikes, the economy showing signs that it could take it. Even if hypothetically, let's say hypothetically that JPOW was to go another 0.75. I don't think that's going to happen. Nothing's really showing that. But let's just say that he says, listen, the economy's booming. We got these numbers. Jobs are still strong. Let's keep it moving. Let's make one more big push and then put this year behind us. I mean, maybe he comes down to 0.5%, which I think is what 95% of people are thinking right now. But even that, you got to think that there's not going to be a 3% slide in 10 minutes at the next rate hike like we seen at the last one. But who knows? You never know what's going to happen when he talks, because it was very strange, the last rate hike. So we got the actual rate hike at 2 p.m. The market went crazy from 2 to 2:30 to the upside. And then as soon as he started talking, not only did it give back all those gains that it just made in the last half hour, it shot almost 2% underneath that. So I'm hoping that doesn't happen today. You know, this the buzzwords that they're saying is this isn't Jackson Hole. This isn't going to be a FUD speech. This isn't going to be, but oh, this is true. This is true, Jerem Corp. As far as the numbers, and as far as, well, it's surprising that the numbers are actually starting to reflect it. We've known the real story behind the job market for months now. It was laid out right in front of us as big companies continued mass layoffs. They continued to tell us everything was strong. The job market's strong. But at the same time, we also knew that in order to get inflation under control, that's part of JPOW's plan. And I'll bring it back to when AOC called them out, as much as that pains me. But again, give credit where credit's due. She called them out on it. She said, if this plan's going to work, right, you need 10 to 20% unemployment rate. And he wouldn't deny it. You know, they don't necessarily talk about that much, you know what I mean? But it's part of the plan, in my opinion. So is it bittersweet? I don't know how to look at it. I mean, we want to get inflation under control. It sucks. We could obviously put the blame at who got us here and why we're here and all that, but the bottom line is we are here, and we're gonna have to give some to get some. It sucks, but it is what it is. Oh, okay. I like that. You know, again, give credit where credit's due. Joe Biden will help celebrate a landmark step in Taiwan Semiconductor Manufacturing Company's construction of a $12 billion facility in Arizona next Tuesday, slated to open in 2024. Hey, I love it. Bringing jobs back to America. Whoever wants to take the victory lap, whatever. I'm fine with it. And they're doing pretty cool stuff out there in Arizona. Who else is Intel? I think it is. It's also investing out there. And I believe Taiwan Semi's already got one facility there. I could be wrong on that. Or maybe it's Intel that already has one. But hey, I like jobs. I like all that. Need those March Euro dollars to come in? Well, hold tight, Grant. You'll be okay. You'll be okay. The China situation still kind of lingering. Now you have Apple being accused of, I guess you say, limiting airdrops during some of these protests, things like that. A lot of allegations going on against Apple. So something to look for there. On top of the Twitter situation, and now a lot of people are bringing up Parler, saying how allegedly, you know, Google and Apple were able to remove it from their app stores just because of maybe a difference of opinion or something. Intel has the plant already. Oh, Honda to begin U.S. production of fuel cell electric vehicles in 2024. Okay. I like fuel cells. The more options, the better. All right, guys, we got 13 minutes before the market opens. Yeah, Zhang Zemin. Hopefully I said that right. Dead at 96, China ex-leader. Now, that wasn't the same guy that got taken out of... I really don't know. It's a genuine answer, but you guys remember I know that guy was an ex-leader, correct? That was kind of escorted out of the meeting. All right, we got Myomo, MYO up 42.5%. CRBP up 35%. Horizon Therapeutics, HZNP, up 30%. Ayala Pharmaceuticals, AYLA, up 28%. What are you guys looking at this morning? I apologize. I got to do some preparation this morning, but I got preoccupied. But I'm here. I'm playing catch up. So let's go. CBS Frog, good morning. Good morning. Oh, this guy was the president during the Tiananmen Square incident. Gotcha. Thank you for that information, Germ Corp. Appreciate it. Diane B. What's up, Diane? Diane, you guys getting any of this rain that we're getting here out by you? We got friggin', I thought hurricane season was over. Come to find out, it's a damn near monsoon outside my house right now. See some of the top losers. Aglia Biotherapeutics down 59% in the pre-market. WISA Tech, WISA, down 37%. That CrowdStrike, there's that Tuesday morning. Tuesday morning was projected to go to $13, I believe, by Bayside High. Yet here we are at 12.5 cents. Never did make that $13. Cosmos, a nice little dip on this Cosmos. Junk Savvy, I gotta ask, did you add to that position at all this morning? So Cosmos down 13% in the pre-market after another stellar day yesterday, 33% gains. And also had news in the after hours. So let's see. So they announced that it entered the development phase for CCX0722, an innovative product for obesity and weight management based on the effectiveness of biocompatible 3D spatial fillers from natural ingredients. Interesting. Spatial fillers are hydrophilic biopolymer grids capable of absorbing and retaining large amounts of water or biological fluids. Administration of CCX0722 is expected to reduce food intake by increasing satiety and reducing appetite. Products being optimized in terms of its physicochemical properties and its effects on gut microflora through a series of in vitro studies and simulations. Cosmos plans to initiate clinical intervention in the fourth quarter of 2023. So still a ways out on that, but hey, if it can help people, I'm all for it. Do the testing, make sure there's no side effects, and keep it moving. Yeah, there's also a bit of a monsoon in the house too. I got buckets. Oh, okay, Diane. Yeah, you don't even want to know nothing yet. Just keep an eye on that coffee mug. Focus. It's all about priorities, Diane. The INX Digital Company, Inc., a broker-dealer and interdealer broker, announced today it has submitted a bid in form of a non-binding letter of intent to purchase assets of Voyager Digital. So, maybe some good news for anybody that's got any kind of assets tied up in Voyager Digital. I guess we shall see. All right, 8 minutes before the open here. Yeah, same here. Same here, Diane. High winds. Lots of it's raining sideways. No bit dip by, the boat's already loaded. Okay. Well, it's pushing back up already. Could have been a good deal, though. Could have been a good deal around that 60-cent mark. Already back up just shy of 68 cents. A lot of interest, though. Interest has not weaned. I'm showing almost 7 million, 6.5 million trades already in the pre-market. And that number's usually, I don't think that's from all. I don't think that number's always accurate on Webull. Lobo, good morning, Lobo. Well, you gotta just have a yawn, have a coffee, and you're good to go. Build-A-Bear Workshop pops on Q3 revenue beat, raised annual guidance. Well, I got nothing for that one. I mean, I guess with Build-A-Bear, I could see the appeal. Even if they are a little bit pricey, everything's pricey nowadays. So maybe the pricing caught up, or maybe inflation caught up with Build-A-Bear. So maybe it is a little bit more affordable. But I think what the good appeal of Build-A-Bear is you get it covers an experience as well as a physical like product. So as far as that goes, personal opinions aside on it, it's a brilliant business plan. And I guess that you could see, even though the price might be high, you're still getting a value. If you look at it like as a parent, you look at it as you're getting an experience as well as something to come home with. So I could see that up almost 15%, $22.26 in the pre-market on Build-A-Bear. Ear, haven't heard that one in a while. Eargo granted U.S. patent number, long number, hearing assistance device with an accelerometer. Accelerometer. Man, I'm having trouble with some of these long words this morning. I'm sorry. I'm sorry, guys. Yeah, GTA. What do you think about that? So we've had 3 or 4 kind of big names. To me, these people weren't big names, admittedly. But as far as the crypto world goes, a lot of strange events going on. There was that interview released. We could play that a little bit later if you guys want to listen to it. I seen Matt Kors was just playing it over on his thing. I forget the young lady's name. It's an interview from maybe 2 weeks ago, the 16th or something, with HBK, BK, whatever. That dude, Sam, SBK. But I believe he's supposed to be doing a more mainstream interview today. I'm not sure if it's going to be with Ross Sorkin on CNBC or somebody, because they kind of alluded to it earlier today. So I'm going to keep an eye on for that. And again, JPOW at 1:30. So maybe expect a lull in the market until then, a little bit of fear. And we got 3 minutes. 3 minutes. And let me know what you guys want up here. I kind of apologize. This setup really only works with another screen to be bringing in. So bear with us. I appreciate you guys' patience through all this. Hyde and Right. Good morning, Hyde. Good to see you, buddy. Good to see you. Good to see you. And I think we need to be on the lookout if Elon. So, just real quick before this open, I forgot about the plans that had kind of been in the works, and we had talked about this last year on the Tesla phone, the Pi. I forget what it was called, but I mentally forgot about that, not that being a thing. And the way he's pushing Apple, if he was to drop some kind of phone, I'm not saying Apple's going to go out of business or iPhones are going to stop selling, but you want to talk about cutting into market share. like that article we were just talking about with Tesla. Tesla could eat into some market share there, especially if he powered it with Starlink or something like that, where you didn't need to go through Verizon or AT&T or something. I mean, that could be a game changer. I think it's too early to speculate on that, but yeah, is that what it is, Pi? Yeah, I mean, now is the time, and maybe that was part of his plan, is to get Apple all riled up, get people, and Apple is not looking good right now. Not looking good with, kind of some of the allegations coming out of China. All right, under 30 seconds, guys. As always, please remember to keep an eye on your own charts. You will get a slight YouTube delay. Makes sense, GTA. And there we go. We are off and running, guys. Yeah, I think it's definitely probably not just a blanket thing, GTA. And I'm sure you understand that, you know what I mean? Non-refundable. What's up, brother? Good to see you. Happy hump day. The market's opening a little bit green. Dow up 0.5%, S&P up 0.1%, the Nasdaq up 0.17%, and we'll see. Again, the interest is going to be around JPOW, but possibly with the Chinese government coming out and saying, we're going to start a vaccine process for the elderly. Not going to mandate it, but going to, make it available, whatever. It looks like it eased a little of that tension over there. We see a recovery in oil prices. They were back over $80 last I seen. And you're seeing energy. So a good sign, I guess, out of China. Hess Corp up 2%, Phillips up just about 1%, Valero Energy up 1%, Marathon Petroleum up just under 1%, Devon Energy up 1.5%, Pioneer Natural Gas up 0.5%, Oxy up almost 2%, Concord Phillips up 1.5%, Chevron up 1%, and ExxonMobil up 0.5%. So good gains early in the in there. Build-A-Bear holding, so a little drop down here at the open, shot up to 22.66 on Build-A-Bear, still up 17%, 19.30. Oh, and that was all imaginary. Now it just popped right back up to 22. Go figure. Cosmos opening a little bit flat, but volume pouring in. 20 million trades already, 2 minutes into the day. Gotta like that. Well, I don't know what to make of it, GTA. Prestige, worldwide, wide. Tell them, Lobo. Investors, possibly you. Cal, that KAL, dipping here at the open, but still up 12%. So we watched that run all day yesterday. May continue to go, hit 26 cents in the after hours. Spy puts on the way. Time to load the boat. I'm torn. I'm torn. If I look to make a play GTA, it's going to be closer to 130, I think. CMP Compass Minerals Q4 adjusted earnings per share of a penny beat the 3-cent loss estimate. Sales 249.4 million beat the 227.10 million estimate. That's ticker symbol CMP. I hope that's the case, CVS Frog. I really do. The U.S. residents will get their money back from FTX. I don't see how either. And I hope all residents are. I read a kind of in-depth article about the people in Australia that the arm of FTX that they were invested in, they're gonna lose everything. Like it was a given. So it's going to be very, very interesting to see how this whole thing plays out, you know. ONCS OncoSec announces pricing of $3.5 million public offering. Market shooting up. The NASDAQ cooking with grease now, up 0.4%. The S&P up 0.17%. The Dow lagging behind, just up 0.6%. This is the last day of the month, guys. So remember, if you got anything, I don't know if you have anything that would expire today outside of oddly traded calls and stuff like the SPY, things like that. That's a great name, Sabrina. Very good food company. VGFC said it plans to launch its products at Albertson Company's grocery stores across the U.S. And we've got a shakedown going on in the chat. Type exclamation heist space all, I think is what you got to do. I believe it's all. All right, 6 minutes into the day, the Dow just went red for a hair of a second. HYMC up near 80 cents on that debt reduction news, 79.88 cents on HYMC. And I believe the big spike KTRA. Who was in KTRA yesterday? Randy Stogner, I think, was keeping an eye on it, was looking at KTRA. Kintera Therapeutics halted to the upside at 669 for KTRA. IMPP flashing a little green, 34.39 cents on IMPP. DBGI, after getting pretty clubbed yesterday, making a little bit of gains today, up 3.5%, 490 on DBGI. Got to see some volume come in, Martin. Got to see some volume come in. But I mean, let's see. Let's look. You're probably going to get this be the first line of resistance right in here. 530, 540, then you get up to this level, 610. Just my opinion. Who said trying to make its way back over that $4 mark? USEA down a little bit today, 2.5%. I think we'll see this thing run again right before the dividend date. What is it? December 12th, Junk Savvy. I would expect another run up into that. What was the volume on it yesterday? Yeah, over 8 million trades yesterday on USEA off the announcement of that $1 dividend. KTRA come out of that halt, shot up to 689 and coming back down at 630 now on KTRA after that halt. JD, we watched this JD yesterday. Enzo had an eye on this JD, and another big move today, up 8.5% for JD.com, and they were the ones. There may have been other news as well. Let's see if there's anything else linked to it, but they were the ones that slashed the pay of senior executives 20%, I believe. Record date December 12th. Perfect. Yeah, I think we'll see definitely some movement into that date. You got the initial hit yesterday on the announcement, and then I think, maybe there'll be a little bit of a lull. Maybe not. Maybe it runs the whole time, but I would expect that big run to happen right before that date. Neo on the move. Neo up 14.25%. Just cracked that $12 mark, trying to stay through there. HYMC up over the 80-cent mark, 80.13. AMC in the red, down 2.5%, 723 on AMC. Look at Ape getting crushed. Ape down 8.5%, 96 cents, hitting new all-time lows on Ape here today. GameStop down just over 0.5%, 25.44 on GameStop. Bed Bath & Beyond down 2%. Nokia up 0.5%. BlackBerry up 0.5%. Koss up 0.5%. Mullen getting hammered again, down 4.25%, back at 19.27 cents. So Mullen, another one on the verge of breaking all-time lows. The all-time low there is or the 52-week low, I should say, but I believe that's the all-time. Either way, 19 cents is the low. We're at 19.2. The one green that I see on the screen, no, GTA, don't call it a comeback. CEI, been here for years. 11.39 cents on CEI. Let's see if we can climb back over that 12-cent mark for my man GTA. Let's see if we can get it to the 25-cent mark for my other man, Luca Bamba. Tiny Boxes. What's up, Tiny? Good to see you. Good to see you. Citigroup maintains neutral on D-Low. Lowers price target to 16. How is that D-Low doing? Man, this thing's been holding, Martin. Been holding. 13.89 on D-Low. And let me look here. So you got in right around this area, right, Martin? If I remember correctly. This is when we kind of started right around in here, right after the drop, right after this big drop. I think this is when you kind of started your position. And I know you were probably in and out of it a few times. But man, still a lot of upside here. Still a lot of upside. Still, I don't want to say just a huge gap to fill, but, and I'm not saying that it's going to come back all the way back to these levels, but you got to think you could get somewhere in here, 1650. All right, let's go, Nan. Let's go. I'm cheering for you. I'm cheering for you. Tiny, what's shaking? You're up early. It's still the crack of ass over there on the West Coast. You noticed I said West. I'm trying to expand my vocabulary, not call you the left coast. So the market turned back down. The Dow falling down now 0.17%. The S&P holding on to a little bit of gains. Let's see those SPY puts start ripping. And the NASDAQ up 0.39%. It's coming along, Tiny. It's a process. We're waiting for some stuff to get delivered too. Some new cameras and things like that. So we've been putting in the work. The finished product will be worth it. That I can promise. Picked him up yesterday. Nice. What's up, grumpy old man? Enphase Energy launches LQ8 micro inverters in France and the Netherlands. Yeah, speaking of the Netherlands, Saturday morning, if any of you guys are interested, I think it would be a good time. There's two certain soccer teams playing each other, 9 a.m. our time. So possibly we could get maybe some of our Dutch representatives to mingle with some of our U.S. representatives, and everybody else is welcome, of course, and maybe watch that soccer game. Lobo. It worked, Grumpy. It worked. Because I didn't see you, so I'm just like, you know what? Maybe if I say his name, he'll come out. That's score one for the good guys, Grumpy. But yeah, that soccer game, I believe it starts at 9 a.m. I'm pretty sure it's 9 a.m. Saturday morning. And let's get our first look at the heat map. Again, energy dominating. That's 2 days in a row. Energy, the greenest sector. We got healthcare green. Tech showing some signs of green. Financials a little bit red. Consumer defensive red. Communications a little red. Consumer cyclical a little red. But we're 15 minutes in, so nothing too big. Oh, come on. Come on, Tiny. You ain't gonna wake up at 6 a.m. for soccer? You know Twitter's lit at that time of night too, Tiny, so you can get two birds stoned at once. No, I probably would, because Nikki wakes up at 6 a.m. either way, but if I had the chance to not wake up at 6 a.m. to watch it, I wouldn't. Cal ripping. Calera Public Limited now up 15%. Oh, it dipped down to... There was a nice dip by there doing a flying V. HYMC holding above that 80-cent mark. What is Bitcoin doing? So Bitcoin still on the move. It did crack that 17,000 mark earlier this morning. Now it's 16,840, excuse me. Ethereum up at 1264. The little Doge that could holding above that 10-cent mark. So maybe still some signs of life in that little Doge coin. GTA, I know you like that Shiba. What do you got? 1, 2, 3, 4, 5. How many? A lot of zeros. And then 917. Yeah. And it don't matter what time he goes to bed, Tiny. Especially now that he's got... So my two older dogs, they don't wake up early. They sleep in. But now that Nikki's got a little puppy, yeah, those two are like frickin' frack. So, it is what it is. There'll be plenty of time to sleep some other time, right? KSCP Nightscope receives 5 new contracts totaling 22 machines. Okay, KSCP, any movement off of that? 5 zeros. Thank you for that update, GTA. Appreciate that. And this is just the filler music for now as well, guys. There's a complete catalog of new music on its way too. That's another thing we're just waiting on arrival. But for now, enjoy these chill beats from what they're labeled as. Add some more Shitokis. I'll take some Shitokis. Neo back on the move. Still climbing. Kind of funny, Sabrina. Kind of funny. Remember what I said yesterday about Kramer? First, how last week Kramer told everybody to buy Chinese. This is the time to buy. Then a guy called in about Neo. So we've seen Chinese stocks tank after that because of the protests, things like that. And then a guy called in about Neo, and Kramer yelled at him and hung up on him. And here we are, up 17.5%. One more addition to the inverse Jim Cramer fund. Why would you go ahead and assume that I wouldn't already have that in my collection, Lobo? Floki USD dropped to 0 yesterday, and you hold $1 million. Get that bread. Get that bread. Oh, XPEV's running even harder. Okay. XPEV, XPaying, up 28%, 940 now. What is I can't understand how this AMTD never got ground going off of all that money that HKD made on that BS IPO, whatever they did. Still being out here worth $4 billion, $3.37 billion. AMTD owns like 80% of them and has a not even a $500,000 market cap. Like that whole thing is so strange. Yeah, I remember you dropped that, Sabrina, because it was very odd that Jeffries would give such a pinpointed price target. You know, and sometimes you have like $1.50, or especially in the lower price stocks. But usually when it's something like this, you're not going to see that. You're probably right at those next levels, probably anywhere in between this like 1422 and maybe 1417. So say 1422. Then after that, actually, yeah, I would say 1420. Then again, you get after that, Martin, it's almost free for all up here. Like I said, but you gotta consider the selling. You gotta consider the selling. There may not be actual resistance after these kind of levels here. You know what I mean? So I think you get past 1432 ish, and then it's just how much buying pressure could come in, and all you have to worry about is really any kind of sell-offs, because you're not going to find resistance. You know, maybe you get a little resistance right here, $15.77, $16 range, maybe some walls, but I would think that those positions have probably been gone during this this kind of climb back up. Lowest price crypto is Sheeb. All right, Tiny, we'll be here. We will be here. I gotta take a second in a minute and go empty some buckets myself and let some dogs outside, let them go swimming for a little while. Look at, I pushed that AMTD in the right way. Back at $2. And strange too that they recently did a 2-for-1 reverse split while they were priced at $1. So preemptively avoiding any compliance issues. And the S&P now down 0.1%, the Dow down 0.21%, NASDAQ still holding 0.33% gains. WEF, I thought that was going to mean something completely different, Sabrina. Western Forest Products, Inc. announces temporary production curtailments in British Columbia. Yeah, WEF, I'm thinking something different. Yes, NEO continuing. Can't stop, won't stop, Arctic Fox. 1246 on NEO, now up almost 19%. What's Lucid doing? Okay, Lucid trying to crack back over that $10 mark. And across the S&P top 10, you got Apple up 0.2%, Microsoft up 1.25%, Amazon up, let's say, just under 0.25%. Tesla up at 185.02 now on Tesla, 2.25% gains there, 0.5% gains on Google. Nvidia up 0.5%. Berkshire down 1.25%. Meta up 0.7%. United Health up 1%. Bio or Neo? Okay, I was about to say it. If it wants 14, it's already got 402.10 on Bio Rad Labs. Where did Neo go? 12.59 on Neo now, 20% gains. Good morning, Hills Bills. Yes, Neo is just ripping. Go back to the 5 minute. 5 minute looks better. When the candles make a nice old school Atari staircase like you see right here. Right here. That would be a staircase in like Pitfall. Boom, boom, boom. Or Qbert. That's when you're doing big things. REVG. Collins delivers all-electric Type A school bus to Colorado's first all-electric school bus fleet. I love that. I love that. I would like to see, you know, if it could be more affordable, stuff like that, like if either public transportation or like buses, things like that, to go EV first, where you're not relying on people having to buy an EV, you know, until the economy kicks back into better gear. I'm all for it. If they're going to spend money on EV anyways, let's do it, you know. Hey, put some kids on electric school buses. Neo up 20.6% now, 1266. Air Niugini renews distribution and distributor agreements with, is that Dunder Mifflin and Sabre or Dunder Mifflin and Sabre, as the carrier enters its 50th year. So ticker symbol Sabre, SABR. Yeah, so that's the thing. It looks like if they force the deal that they're, so this is again from somebody that's never really dealt with unions, unfortunately. I've only had 3 major jobs in my life, and although there is technically a catering union in New York State, I was not part of it. My job was kind of a hybrid situation. It looks like they're siding with the employees, if I'm understanding correctly, and I know that's a thin line as far when it comes to unions, so I don't want to misspeak, but it looks like, again, just from an outside point of view, that the employees want what they're pushing for is the I think it's 7 extra days of paid sick leave, something along those lines. So if they force that to be put on there, and then the union to accept it, again, I hope they can meet in the middle. I mean, they had a guy earlier talking about it, and I think they get a 24% raise over 5 years. And one of the representatives for the people was saying, that still doesn't really cut it in comparison to how much, how profitable railroads have continued to become more and more profitable every year, this and that. So it's like everything. I hope for a peaceful resolve, but I don't want to see the workers get screwed just on the sense of, well, we need this stuff for the country, so you have to take a shit deal. Like, I don't want to see that, Thoughts? Anyone got know a railroad worker out there, or maybe was a railroad worker at one time? You guys got any interest in this? HKD up 10%? Yeah, not no more. GTA. Don't ever say HKD looking nice. Job openings 10.25 million. Or job openings 10.334 million. Expected 10.25 million. So more job openings than expected, but less than the last report. Awesome. Thank you, Germ Corp. Really appreciate you, buddy. All you guys that bring this news, Sabrina, Junk Savvy, Germ Corp. Could not do this without you guys, especially on a day like today when my preparation was kind of limited. You guys always coming through. So again, does this give? Does this give more credence to price hikes, or does this give more credence to this is working? This is working. We're seeing job openings that aren't being filled. Diane, if you had a few minutes to do that at some point, whether it's today or, over the weekend, anytime, I would just love to know, some real boots on the ground type, because I'm sure that he's well aware of the situation, and would just love to hear kind of his thoughts on it. That would be amazing. S&P falling further. This is where those SPY puts come into play. They're 99. 1003. Let's take another look at this heat map and see if anything's starting to cook. Okay. Starting to come through in color. Financials, bright red. Bling, 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 bling. Lots of red down there. Tech starting to go green. We got some green in the tech sector. Energy coming back from that bright green we seen earlier. Tesla holding up consumer cyclical. United Health holding up the health sector. And then you got diagnostics and research coming through. Non-refundable, my man. Much appreciated, my brother. And again, still working on those. Still working on the super chat things. But once this thing arrives in the mail, it'll be on and popping. But really appreciate you, Nan. Lee, is that Lee Auto? Hello. Yes, ma'am. Good call, Sabrina. Lee Auto, 2187. So we're up 18%. And you said they got a conference call with earnings coming up on the 9th. So we'll keep an eye on this going into the 9th. I'd still play earnings this month, especially if you get a run going into them. I would be buying the rumor and selling the news. Not financial advice. Not at all. Not at all. So Neo coming a little bit off those highs, 1270. Taking a breath for a second, 1248. Neo still up almost 19%. So D-Lo back fighting around that $14 mark. Yeah, I think you need some volume in D-Lo, as opposed Martin, if you're still out there, as opposed to where's it at? As opposed to DBGI, which obviously you need some volume, but with such a low float, you don't need as much, I don't think, as you do with D-Lo. D-Lo a much higher float, but nonetheless, still up 3 3/4%. And I still think, Martin, you could realistically, if you're just holding that for a swing trade, not as like a particular day trade, I think realistically you can look at 1650, 17, and probably try to catch that. Now, bear in mind, Martin, that of course, if JPOW doesn't say something terrifying, you know what I mean? And obviously the longer that plays out, you have you have CPI and stuff like that coming into play in 2 weeks. And Lucid trying to hold that $10 mark. AMC holding right at 728, down 2%. GameStop at even now, 25.60. Ape hit 94.65 cents, so a new all-time low on Ape. A little bit up from there, 98.3 cents. Nothing good there. So some of the bigger names in the tech sector up here: Synopsys up 0.5%, ServiceNow up 1.25%, Intuit up 2.34%. That's ticker symbol INTU. Salesforce, they have their earnings today, after the bell, I believe. Yeah, their earnings are today after the bell. They're up 0.25%. Accenture down just slightly. Cisco in the green. Adobe up 1.5%. Oracle Group slightly in the green. Apple and Microsoft, we know their story. Pending home sales down 4.6%, expected to be down 5.7%. So, more numbers. So, pending home sales on the decline, still just not as much as they anticipated. And the last one was positive 8.7%, Germ Corp. Oof. Wild stuff. All right, guys, it's 10 after 10. I'm sorry, I got to take a break a little bit early. But I'll let the dogs out and stuff while I do that. But I got a little bit of a leak downstairs I got to take care of. So enjoy the music for just a few minutes. Let me get. I'm not sure what you guys are watching. Neo seems to be the funnest. So that's the reason WISA dropped so much. WISA reported late Tuesday. They announced the pricing of 7.6 million public offering of 50.4 million units at a price of 14 cents per unit. So, I mean, is this... If you bought that extreme dip, it got as low as 8.36 cents in the pre-market on that. So you're sitting at now at $11, or excuse me, 11.3 cents. Right? But you have to assume that it's going to go to 14. So this is a public offering. Are people going to buy it at 14? You have to think that will... I mean, not financial advice. I'm not going to take a chance on it. But could be some room for some upside here. I don't know their compliance issues, things like that. I would look into that before making any kind of investment. But down 32% on the day on just an offering news. That the offering being almost 3 cents higher than where it is. Do your part, Diane. Do your part. Here goes ear. Why do I feel like this is like a bootleg version of Here Comes the Man in Black? How's that, Mr. Peterson? A little bit better? I'm sorry, buddy. We're still trying new things out here. But yes, let me know if it's what you can and can't see and how it's coming through. But I do have to go take care of this situation real quick and be right back with you guys. Here, I'll put Neo back up there for you. Oh, fantastic, Diane. I would love a Tom original. Awesome. Appreciate it. Man, look at that volume flying into Neo. All right, guys, I'll be back in just a few minutes. All right. Welcome back, guys. Welcome back. Welcome back, Tiny. Uh, GME, let's go. Let me see if I can get this text bigger. Oh. Let me know if that's better. If I go like this. I'd like to see those. Yes, indeed. Somebody is speaking today. Jerome Powell speaking at 1:30. And then that interview with Sam Bankman-Fried. Like I said, there's an interview that came out today. If you guys want to listen to it, we could probably play it. Or it came out last night from the 16th. But he's doing an interview. I think they say that it's free, but I think you got to pay. The Wall Street Journal had like a invite or an RSVP. So that's between 5 and 6 tonight. Ain't none of that stuff moving. Yeah, so I'm sorry. That interview is tonight between 5 and 6 with Andrew Ross Sorkin and HBK, HKD, HBKT, B, SBK, SBK. BlackRock Sphinx says company had a $24 million investment in FTX. It's a drop in the hat to them, right? I would think. All right, let's try medium font instead. Or maybe just large. Thank you, Hills Bills, for the handsome host tax. Appreciate that. Much, much appreciated. And thank you for your advice vis-a-vis my plumbing, or I don't know if you would call that a plumbing issue, but a weather issue. A weather issue. That just shows, too, let me just point this out, and I'm man enough to point this out, what an awesome community we have and how amazing the females are. The two people that I went to invite, well, actually, there was three, because Odie Fro also gave me some help this morning. But the two people that helped me out with my problem, Junk Savvy and Hills Bills, two amazing women that both have skills way beyond my means, that in a lot of people's minds, maybe you think of it as is the man's job or whatever, but both these two could probably build a house and tear it down in the same sitting, and appreciate you guys and appreciate the fact that I live in a world that I could go to a woman and say, you know what, I need some advice. It's raining in my kitchen. What can I do? So thank both of you guys for being awesome. And thank you, Hills, for that super chat. All right. What's the market doing? All right. Maybe we need to go to the medium. I'm not liking this either. Oh, that's a little better. All right, third time's a charm. All right. Sorry, guys. S&P down 0.32%. Dow Jones down 0.2%. The NASDAQ still holding some green, up 0.25%. DBGI falling again, down, what are we down now? 10%. Li Auto, Sabrina call out, up 18%, 21.93. Lucid holding above that $10 mark. D-Lo back over that $14 mark. So we made a run to 14.12, a run to 14.16. Could start pushing. NEO ran up as high as 13.27. Now back down at 12.86 on NEO. Good old BBW, 22.32, 15% gains. We talked about Build-A-Bear with those good earnings. HYMC, after running up to 80.6 cents, now back down in the red, down almost 1% at 76.48 cents. And again, that was moving on some debt being cleared up. I still get CEI up there for you. GTA. Oh, yeah, CEI. Oh, you got to buy this dip, right? Yeah, pretty much, Hills. Pretty much. I would say it was pretty much the same. I'm sure I'll have more questions when I get off of here today and actually start dealing with it. But for now, it's just a drip, and there's a bucket there. And as long as the water doesn't fill up enough to where the dog tries to drink it, I'll be okay for a little while. I probably like it about it just as much as CEI, GTA, equal to or probably equal to. I would say the same kind of upside, maybe. I mean, there's not a lot to like on this. I mean, it's seen better days. I guess there's some room for Yeah, I don't know. I wouldn't like this. It's been out of compliance since May. So you know a reverse split's got to be coming up. Yeah, I don't know. $17 million shares. Yeah, I recant that. That's gonna be a no for me, dog. 52-week low is 52-week low here, 10 cents. 10 cents. So they kind of look like they could be good competitors. You taking CEI on the over-under? I'll take Dogecoin. If we got Dogecoin, CEI, and WISA, I'm going Dogecoin. Final answer, GTA. Luca Bamba. What's up, Luca? Good to see you, brother. When in doubt, pull the heat map out. That's what I say anyways. All right, financials bleeding even more. Energy starting to bleed now. What do we got? Industrials in the red, consumer defensive red, financials real red. Not really a lot of green. Top ones here. Tech really showing it, and obviously that's apparent with the Nasdaq being the only index in the green. The S&P now down 0.29%. Keep an eye on those puts. Dow Jones down 0.62%. Not financial advice, non-refundable, but I would, if I was holding those, if I was holding puts maybe into the JPOW speech, might be risky to hold through, especially if you have profit. A good move, again, not financial advice, might be take that profit, get into a cheaper one to take a chance, because it's going to be an event that you're going to lose a lot of value right after it. One side's going to lose, one side's going to gain. So if he talks good and comes off dovish even in the slightest, puts are going to go right down the toilet. And if he comes off hawkish, calls are going to go right down the toilet as far as the SPY goes. I don't feel a pump coming, but I would protect myself against it. That's all, non. I really don't know. I don't think it's going to be I don't think he's going to say anything as devastating as his last talk, but again, I would play it very defensively. What's up, Lionel? Good to see you. Well, we're hearing some news that maybe you'll be able to get some of your Voyager Dogecoin back. Yeah, I could see that, GTA. I could see that. But if there is some big moves as far as Voyager getting bought out, as far as what goes on with BlockFi, I mean, if things go one way and FTX is the only one that really falls, then I can see a quicker turnaround for crypto. But at the same time, it could be a longer haul. Regulation, I think right now, the knee-jerk reaction is that people are welcoming regulation, and maybe down the line when that regulation actually comes to fruition, are people still going to be as enthused about that regulation? You know what I mean? Yeah, but people continue to buy Solana, don't they? GTA? Could be, Luca. Luca saying, I got a feeling Voyager and BlockFi will be bought out by Binance. Could be. Well, I get the BlockFi, so I never had a Voyager account, never even tried to sign up for one, but at some point I signed up for a BlockFi account with an email, but never deposited or anything. But they send me, so like I got an email yesterday updating the bankruptcy proceedings. I don't know. It doesn't. It seems just like a bunch of very, very vague, just kind of descriptions. You know, we'll do our best to try to recoup as much of our customers' assets. No, there was nothing concrete, and then their next date for BlockFi, their next court appearance, isn't until sometime in January. So, as far as BlockFi goes, they had their first bankruptcy hearing yesterday. Don't have another one until I think it was January 13th or so, somewhere around there. So maybe something happens in the process. I don't know. Yeah, people like that Luna. So what's the difference between Luna and Luna Classic? What is there? Luna Classic, and Luna 2.0? That one didn't really take off, right? So isn't like Luna Classic the same as Luna, or isn't Luna like the new one the same as the old one, but people just try to tell themselves it's not? If that's my understanding, and again, if I'm wrong, let me know. I don't hold any of that Luna. Neo kicking back to the upside, 1277 on Neo. Another one bites the dust. Another one rides the bus. If your token is cheaper than Shiba, reevaluate it. People love it, man. People throw up that Lunatard sign, and I'm not hating. Whatever. Listen, if hustling people out of money is your thing, poo coins, as they say, are a great way to do it. I don't advise that. I don't condone it, but there's always going to be swindlers in this world. Metamaterials taking a hit today, down 8.88%, under that $1.80 mark, 179.5 on Metamaterials. That's what they call themselves, I think. I'm pretty sure. Hey, to each their own. To each their own. Whatever makes you happy. USEA 348. We talked about that. A little bit of a lull in the action there. Only 173,000 trades. But again, I think that'll heat up closer to December 12th. I think we can find another run. And the boy JD.com was a friend of mine. JD holding those just under 9% gains, 57.92 for JD, bowing up 1/3%. XELA Raining on Caesar C's parade, down 3% today, 17.4 cents on XELA. We need that thing to lose a couple zeros for you, Caesar. Look at Hellbiz. Hellbiz down 19%. So Hellbiz, after a few nice green days here, a few run-ups, back down at 23.49 cents. Polestar, I know my man Saucy Fredo loves him some PSNY. That's up 5%. Yeah, you have no idea, Luca Bamba. I'm actually looking into it. The word is CEI actually paid top money to plant GTA here over a year ago. They've been paying. It was all a long con to get people like me and you to invest in CEI. He did it right too. He came in, he badmouthed CEI for a little bit, set up a trust with us, you know what I mean? And it was like a reverse rug pull. Well done, GTA, with the long con. Netflix, a little bit of green, up 1.3% on Netflix. Just hold tight, Caesar. Hold tight, and we'll get there. All right, the NASDAQ flirting with some red now. So we got the Dow down 6.64%, the S&P down 1/3%, and the NASDAQ still holding a little bit of green there, up 0.08%. Yeah. Yeah, that's called a long con, GTA. That's exactly what that is. Yeah. Kind of like create the problem and then offer the solution. That's what you did. And then once it got to where you were ready to load the boat, you teamed up with those boys over at Bayside, Zach Morris and them. Bam. Mixed bag within the semiconductors. Texas Instruments down 1%, AMD down up 0.5%, Taiwan Semi up 1.6%. And they've been riding high, guys. You got to follow. There's a reason why Warren Buffett is such a respected trader. You don't have to like the guy. You don't have to think that you can think that he's old-fashioned, things like that. But you can't argue with results. He disclosed that stake in Taiwan Semi. Let's see, somewhere right down in this area. So the $60 range, even if he bought up in here, which I think it was closer to in here, 60 to 65, up 20% quick, probably more than that, probably up 25% on that investment in Taiwan Semi. And then you have, I forget the date, but you have Biden going to be pumping it with the investment in Arizona. So you got to think more good news coming for Taiwan Semi. Trust me, as much as I would like to think that I work hard and do the research and can put myself on a level like that guy, I could never in a million years. And I'm not saying anything Warren Buffett invests in, run and throw the house at, but he's definitely somebody not worth stigmatizing just because of his age and his kind of method of trading. Like I said, a lot of people think it's outdated, it's old-fashioned, blah, blah, blah. But again, you can't argue with results. Wait for a dime, boys. Could be 52 weeks, and then here we are, 64 weeks later. It happened. 1:30, Luca Bamba, 1:30 p.m. I'm gonna try my best to bring it to you guys. A little bit of a conflict of interest when it starts is when I have to go get the boy from school, but I will figure something out. We got this. We got this. It's all about where I can bring it in from, but it should not be a problem. Even if I got to just start it a few minutes early. And then I'm going to look into if I can get that interview. Maybe I'll put it in Discord tonight if anybody's interested. It's between 5 and 6 with Sam Bankman-Fried and Andrew Ross Sorkin. If you don't know who Andrew Ross Sorkin is, he is the gentleman that looks like the first husband from Married with Children. Not Jefferson, the other one, Steve. So he'll be doing the interview. He's a good interviewer. I'll give him that. CNBC guy. AGLA, Agley, nosedives after clinical update on investigational candidate for rare metabolism disease. Yeah, so that was up there on that biggest loser list. That's number one. Nanovibronics down 31% too. What happened here? Okay, so Nanovibronics company announced a $2.4 million registered direct offering priced at the market under NASDAQ rules. So, again, maybe an overreaction to a private placement. Would seem to be an overreaction to me, but how long have they been? So another company that's going to be having compliance issues here soon, if not already, Nanovibronics. Tuesday morning announces a 1-for-30 reverse split of common stock. So maybe that was how Zach Morris thought it was going to get to $13. Or no, that wasn't Tuesday morning. That was Momo, was it? I forget the one. Tuesday morning at 12 cents a share, down 21.8%. Heard a rumor that Robinhood retracted their earnings. I did not hear that, but I know that there's a lot of Robinhood talk when it comes to FTX, when it comes to Voyager, when it comes to BlockFi. I know they're getting, again, a lot of allegations out there. I don't know what's obviously true or not. Robinhood down about 1% today, 9.10. Oh yeah, BlockFi suing Sam Bankman over Robinhood shares. So BlockFi sued a holding company for FTX founder Sam Bankman-Fried, seeking to recover shares in Robinhood Markets pledged as a collateral 3 weeks ago before BlockFi and FTX filed for bankruptcy protection. BlockFi, in a complaint filed on Monday in New Jersey bankruptcy court, said Emergent Fidelity Technologies Ltd. has defaulted on its obligations under a November 9th pledge agreement. Emergent guaranteed the repayment of obligations of Alameda Research, the crypto hedge fund affiliated with FTX, according to court documents. Emergent holds a 7.42% share of Robinhood. Bankman-Fried is as a defendant. He didn't immediately respond to requests for comment. Surprise, surprise. So what if those shares aren't there? So they're FTX through this other company was supposed to give these shares to BlockFi. I don't know. ONCR on Chorus pulls plug on phase 1 candidate, lays off 20% of its workforce. Well, the first part isn't good news, but the second part, has been acting as good news in some situations. We've seen layoffs be catalysts, more so in the tech world than anywhere else. And I think the reason for that is I think people have a faith that these layoffs are people that aren't going to affect the bottom line. Whether it was wasteful hires, whether it was overhiring, whether it was jobs that have been automated, things like that. I don't think people view the tech sector job loss is a big decline, I should say, where in other sectors, such as something like this in the health sector, you might look at layoffs in a different way. All right, 10:58, guys. We are almost at 11 o'clock, hour and a half into the trader day. And the Dow Jones coming back slightly, down 0.59%. S&P down just over 0.25%. And the NASDAQ remaining in the green, up 0.1%. DoorDash, another one, laying off 1,250 employees. CEO Tony Zhu told employees that 1,250 corporate workers would be let go as part of a broader cost-cutting initiative. In a message released to the public, Zhu offered 17-week severance. Excuse me, and 2023 vesting is part of the severance package. See, perfect example of different sectors, same kind of news. Company shares were up 5% on the news. DoorDash joins the ranks of Amazon, Meta, Twitter, HP, and Lyft on imposing job cuts. Tech industry hiring ballooned during the COVID pandemic and has seen a harsh come down in recent months as interest rates mute consumer demand and investor confidence. Well, and I think in this case, it's corporate bloat, because sure, you need people to run the software that makes DoorDash operate, but the people that do DoorDash, it's all contracted out. The restaurants provide the product. The person delivering provides the service. All they really provide is the infrastructure to communicate between A and B. And again, I'm not downplaying that, the upkeep of that, but why would it ever even take 1,250 people to run that in the first place is my question. EDBL. So EDBL up 14%. Edible Garden. Last news on this was a couple weeks ago when they now offered its unique poultry mix, potted herbs at new retailers. And DBGI continuing to fall, 415 now for DBGI. Lucid back down 992. What's Neo doing? All right, Neo down a little bit, but holding 18% gains, 18.5, 1244 on Neo. Well, somehow chicken isn't poultry. Wouldn't I don't know. Does poultry have a dual meaning that I don't know about, Sabrina? But that sounds pretty much like a chicken garden. Who am I to argue with a chicken garden? Oh, here's a good one too. Morgan Stanley's Mike Wilson predicts double-digit percentage drop will hit stocks in early 2023. Has an S&P 500 year-end target of 3,900 for next year. So just as a comparison, we are right just kind of over that, 3,943 right now on the S&P. Nobody cares what's going to happen in 12 months. They need to deal with the next 3 to 6 months. That's where we actually think there's significant downside. So, 3,900 sounds like a really boring 6 months. It's going to be a wild ride. You should expect an S&P between 3,000 and 3,300 sometime in probably the first 4 months of the year. That's when we think the deacceleration on the revisions of the earnings side will kind of reach its crescendo. On Tuesday, the S&P closed at 3,957, 63, a 17% decline so far this year. Wilson's year-end pricing target was 3,900 for this year, too. The bear market is not over. We got significantly lower lows if our earnings forecasts are correct. So one man's kind of vision. Oh, chicken seasoning garden. Meet Kevin ETF is now named PP. Okay. Disney hired 30,000 people in the latest fiscal year, bringing workforce to near pre-pandemic levels. That's interesting. That's interesting because I would be willing to bet that those numbers don't include jobs that were eliminated. And here's why I say that, because when Disney first opened their parks back up, I remember watching a big to-do on how they were able to slash half the workforce and still have the same productivity. And that half the workers they weren't bringing back after the first shutdowns. So I wonder where those numbers play into it. Obviously, Disney is ever expanding as well. So those are strange numbers, because 30,000 people with a turnover with like Disney, that doesn't seem like a whole lot, like enough to bring them back to pre-pandemic levels. But what do I know? I'm just a dude. REGN, Regeneron's Evkeeza under FDA priority review for younger kids with inherited form of high cholesterol. Okay. Tough Built TBLT up 6.5% today, 241 on Tough Built. Mullen did not hit that 52-week low. We hit 19.1 cents. Did not fall to that 19-cent 52-week low. Now at 19.37 cents on Mullen Automotive. We're at 11:07. 4 more minutes, guys. You can make a wish. And we got about 2 hours and 20 minutes before His Highness speaks. Below hanging tough around this $14 mark, Martin. You gotta kind of like the consolidation up here over $14. My house sounds like it's gonna blow away right now, so sorry if you guys are hearing like window shaking and stuff. It is nasty out there. Brush. So not just brush, brush. Oral care. BRSH. Brush. Up 23%. Not seeing any new news since back on November 3rd when Brush appointed a new vice president of sales and business development. But up 24%. Bior, B-I-O-R, the artist formerly known as P-R-O-G, after a nice day yesterday, giving a little back today, down 4%, 24.01. Same thing with KTRA. We had that halt right out the jump, ran up to 6.89. It's like a jungle sometimes. It makes me wonder how I keep from going under. No. Broken glass everywhere. HYMC, after that little bit of a run earlier on that debt reduction news, back down now 1.25% at 76.15 cents. GameStop couldn't hold that green, back down 0.75%, $25.42. Ape now at $97 flat, or 97 cents flat. Wow. And AMC down 2.5% at 724. Mullen getting closer to those 52-week lows. Centro Automotive up a little bit, 63.35 cents. So a disappointing from here down. We got back over $1 on Centro back at the beginning of November 3rd. Thought we may be able to hold that, possibly avoid a further reverse split, but we weren't able to hold it for 10 days, and the stock has come down since, but up today 2%, 63.34%, or 63.34 cents. And what else? Mortgage rates fall for the third straight week, but demand still drops further. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances decreased last week to 6.49% from 6.67%. Mortgage applications to purchase a home gained 4% from the previous week, but demand was 41% lower than the same week 1 year ago. And so this article trying to use that as fuel to slow interest rate hikes. Hey, Bertie. I wouldn't say we're nervous. Excited. Things like that. I don't really. It kind of stinks that we got to beat your team. In the first round, I would cheer for a tie like I did with Germ Corp, but I gotta say I'm gonna be pro-American on this one, Bertie. But we were talking, Bertie, about possibly having a little watch party or something in the Discord. It was an afternoon game for you, 9 a.m. Saturday morning, my time. So let me know what your plans are. I'm sure maybe you're watching it with, I don't know. I don't know what you guys do to watch soccer there. Do you go to the pub? What do you do? Do you bring the pub to you? U.S. crude stockpiles plunge as refiners surge activity. Well, that's never good. We don't want our stockpiles to plunge. So energy all taking a hit now after being up to begin the day. Crude is still staying above 80, coming down from where it was. I think it reached maybe right above 81 earlier, but crude back at 80.15. But we are seeing a big pullback. Hess still up 0.5%. Phillips down now 0.63%. Valero down 0.5%. Marathon down 1%. Devon Energy up 0.5%. Chevron up a little bit. Exxon up a little bit. Those gains are coming back. Oxy still up 0.38%. And, that's the other thing. Then you see, talking about Warren Buffett, you see when he exited, I think they still hold some, but he had got that big position in Oxy and pulled a lot back after big profits. Big profits. All right, 11:15, guys. 45 minutes before we get into trader lunch. Oh. All right, Bertie. Okay. He says it's not like we play Brazil or Germany, so we're just watching it at the house. Okay. Well, Bertie, yes, I think maybe we should have a little Discord party. I will drape myself in the U.S. flag and maybe wear my I don't even know. I couldn't even name one player on the U.S. soccer team, or I would maybe wear one of their jerseys. I'll break out a Alexi Lally jersey. He was pretty good. I don't know, that game yesterday, Bertie. I usually say that soccer games aren't that exciting. I thought that U.S.-Iran game was pretty good yesterday on both sides. I thought they both played their hearts out. So, what just happened there? Sorry about that. And the job openings and labor turnover survey showed there were 10.33 million vacancies for the month, a decline of 353,000 from September and down 760,000 compared to a year ago. That left 1.7 job openings per available worker for the month, down from a 2-to-1 ratio just a few months ago. Job openings dipped in October amid the Federal Reserve's efforts to cool off a red-hot employment market, the Labor Department reported Wednesday. Job openings and labor turnover survey, a closely watched gauge of slack in the labor force, showed there were 10.3 million vacancies for the month. That's a decline of 353,000 from September and down 760,000 compared to a year ago. The Fed has instituted a series of rate hikes, blah, blah, blah. While the monthly numbers can be volatile, the JOLTS report provided at least some measure that the Fed's inflation-fighting efforts could be having an impact. The report came the same day that payroll processing from ADP reported job gains of just 127,000. So, I guess this furthers the case for... I'm not sure how you look at it. You start to see these. So is this a case for them to slow the rate hikes? Or is this a case where they say, well, we need to sustain these rate hikes because, when you use working, do you say, well, we need it to continue to keep working? Or do we think that they lay off a little bit? So I think he's got probably more data this time, JPOW, to point to. I wouldn't go as far as to call it dovish by any means, but at least to give us reassurance that inflation has peaked. Number one, I think that's, even that isn't guaranteed at this point, but I think if we get that indication, an indicator that the 3/4 or the 75 basis points hikes have been working, which, like I said, they've got numbers that they can point to and say it's been working. I don't know. I mean, he's got to have some hawkish comments, I think, but all right, guys, give me a quick 2 minutes again. I am very sorry, but I hear my dogs ruckusing around down there, and normally I wouldn't care, but I have buckets with water in them. I'm sorry, guys. Just give me like 5 minutes, and I will be right back with you. All right, guys. Sorry about that. I am back. All right. We got 34 minutes. 34 more minutes before trader lunch. And the market turning back to the upside. S&P down 0.12%. The Dow down 0.44%. The NASDAQ up almost 0.25% now. Yeah, I'm hoping, Caesar. Let me know if you're going to be around that morning, Caesar. Like I said, we'll set something up in the Discord. Any of our international friends want to join? I think it would be a good time. All right. Let's glance at this heat map one more time. See if anything's changing. Seeing if we're getting a little green going into JPOW. Tech still mostly green. We're seeing that with the NASDAQ up. Financials still bleeding. Consumer defensive. Lots of red up here. Energy. So energy went from bright green to red. Now kind of stabilizing. Real estate down. We had some housing numbers. Industrials down. Basic materials down. So still a lot of fears out there. No doubt about it. Yeah, it should be fun, Birdie. It should be fun. And I always enjoy watching soccer with soccer fans that can bring a little bit more to the game than I would necessarily see. Like I had no clue that, I don't know, Birdie, if you've seen that goal the U.S. scored yesterday, but we were watching it. I was watching it on TV, but I was in the Discord with Luca and Lobo. And I had no clue if that was like a legit goal or not, because I don't know those rules. Like I thought it was similar to the crease rule in hockey that the Sabres got screwed on in the no goal 1996 Stanley Cup Finals. Brutal. I think it was 96, maybe 99. Yeah, maybe 99, 98, 99. S&P top 10, we got a lot of green out there now. So yesterday it was the small caps holding it up. Today we got the big boys starting to bring the market a little bit greener. Apple up 0.5%, Microsoft up 0.5%, Amazon down less than 0.1%, Tesla down from those highs earlier. But at 182.30. I'm sorry, I gotta look at this. I just got like 10 messages. Okay, sorry about that. Airbnb partners with major landlords to let renters become hosts. So what is that? Fourth party renting? So I buy something, I rent it to you, and then you rent it to somebody else, and then eventually Airbnb renters will partner with Airbnb users to make Airbnb users be able to rent their rentals to rentees. I did see that AMC selling movie themed merchandise. I think that's a good move. I think that's a good move for them. I don't know the financials of it of how they'll make out. I don't know if it's as good as popcorn, but I think it's perfect for movie theaters that are located in malls, things like that, where people are shopping anyways. Uh, Standalone theaters, I guess it's a big deal. A lot of parents probably not liking it if they set it up like when you go to an event, when you go to like Disney on Ice or something like that, and they're trying to sell you $30 plastic pieces of crap, and you know damn well if you wait till after the show, they'll be selling them out there for $10. All right, Birdie, going to watch Denmark, Australia. Birdie, today I'll be back. I still got to go get Nikki, but JPOW talks at 1:30, so we'll be back for that hopefully. But then we'll definitely be back for Power Hour. %5 of candy sales, yeah. Rehypothecated rentals. Yes, CBS Frog. That is a churched up way of saying it. I like it. I mean, I guess the idea of that is okay. I'm thinking big city setting. I guess I could see how that could work out. I don't know. But essentially, what I wonder that is like, okay, is the landlord gonna get a cut of that? So now I own something, I rent it to you for $1,000 a month. You're providing a service that's bringing in you income. Am I getting a percentage of that just because I own it? Which I would imagine that they are, or there wouldn't be some kind of deal in place. And then the other part of that is people that rent out their homes as an Airbnb typically have another place to go. Either they travel for business or they have a separate house. I don't know where those people will go. Like if I'm renting a house, am I gonna go rent, or I'm renting an apartment? Like I don't. Yeah, kind of like subletting your apartment. But so the reason that people would do that, CBS Frog, if sitcoms have taught me anything, that would be more of a not wanting to lose the apartment, right? So for example, people weren't subletting it to make a profit, but more to keep the lease. CNN's top boss, Chris Licht. Wow, I know a Chris Licht. He's a hell of a mechanic, too. Spelled the same way and everything. Chris Licht informed employees in an all-staff memo that layoffs are underway and would notify a limited number of individuals, largely some of its paid contributors. Oh, nice. Bought some tickets to go see Bill Burr in a few weeks. That should be amazing. Oh, a good movie from the 70s or 80s called The Goodbye Girl, about a lady who sublet her apartment and tried to cancel it, but the guy showed up and they had to share the apartment. Hopefully it was a comedy and hilarity ensued. Yeah, I could see that. some stay with friends or rent cheap hotels if they can sublet to vacationers for more. Or because they can't get out of the lease. Another good point, Hyde. I mean, I guess it's a good idea if you're able to create some extra income for anybody. I don't know. Seems like the landlord's really making out on that deal by not having to do anything and reaping a profit, but I guess they assume some of the risk and all that, so. Okay. Hilarity and romance definitely ensued. Good stuff. Good stuff. And the S&P about to go green. The Dow still lagging behind, down 0.37%. Exactly what the NASDAQ is up. And the S&P absolutely flat. So a flat performance going into just about 2 hours from now. Jerome Powell. What will he say? What will he do? Will his arms go like this? You got to tune in to find out. Airbus to pay 16 million, is that euros, to end Kazakh Libya bribery cases. Okay. Seems legit. CEI's eating crayons, apparently. Let's check that out. Oh, CEI getting ready to load that boat. Getting ready to load that boat. Oh, here comes that rain again. It ain't never stop here. So hopefully you don't get a lot of it there, Junk Savvy. It's raining cats and dogs out there, though. But I will say my backyard has absorbed a lot of it. There's only about half of it's underwater now. So it's kind of cool to see. What's up, Tiny? Welcome back. Welcome back. Just in time for, whatever. We're having a day here, Tiny. We're having a day. We're getting Western New York monsoons. Gotta love the weather. Have a friggin' 5 feet of snow 2 weeks ago and now a foot of rain. I would like to talk to Greta about all this. Oh, you got some snow coming there? At like 4 for 3 days? Oh, probably an inch? Well, an inch of snow could be lethal if not handled correctly. The thing is, if depending on the way the precipitation falls, if you get that layer of ice underneath 1 inch of snow, and everybody's walking around with kind of false footing, it could be dangerous. I've got no snow, Tiny. I've got it's raining in my kitchen right now. And I've got my backyard is underwater. So all that snow melted. It was gone for a couple days. And then I woke up this morning to a monsoon. So that's where I'm standing. Meta is closing one New York office with cutbacks looming. Well, I would think, Germ Corp, that Meta shareholders would welcome that news. I think at this point, Meta shareholders are looking for any cutbacks they can get, anything to show signs of reeling in the spending, even if it's not the spending that they want to see decreased. I think kind of the consensus is they're not completely against the metaverse, but they would like to see the spending kind of reeled in, and at least for the time being, focus some more of the spending on the areas that actually do make money, of what Facebook does good. But nonetheless, I think any kind of cutback will be welcomed with warm arms when it comes to meta. I would take that right now. Arctic Fox. Normally I wouldn't. Normally I would say I'll take a little bit of rain. But this is that sideways rain. Yeah, so that would be cool to have a place to do it through for like long term. And I should actually, so my sister, I should have her look into that. She uses a different agency, but she has a place in Florida that she rents. Not like Airbnb. She rents it for by the month, but it's for people that are um, either moving down there and need a place to stay till they get a house, or are going down there to work, for months at a time or whatever. But I would think that a company like Airbnb, because people just instinctively would know to go to it, you would probably reach a bigger audience, being able to sublet it through Airbnb. So again, I look at things like from my area biasly, so I'll admit that. I look at the problems that have already arose from Airbnbs in our area, and with us having a bigger renter class and a lot of our landlords being from either out of town, out of state, out of the country, there's not a good line of communication between landlords and renters. So I don't know how good it would work out. Yeah, and we have people that do that. Like we have places like that where we have like a section of town near Niagara University that people are doing that. And okay. I'm glad you brought that up because people were getting mad about that. They weren't happy. I don't know why. But they weren't happy that people were renting like individual rooms. I don't know what their beef was. I didn't look enough into it, but it seemed strange that it would even matter, you know. But I think their beef was the landlord was getting duped. So this was people that they must own houses in the area and have a voice in the local media, but they were griping about it because these people were doing a similar situation though. But my thing is, Hills, if they rented you that villa, they agreed for that whole villa to be rented at the price that you and them negotiated on. The fact that you were able to then rent it out for more money, as long as at the same time you were adhering to, whatever was in your lease, then that's on them. And I think that's what was happening here. I think it was just I don't want to say a jealousy thing. I want to say it was almost like an outsmarted thing, where now these landlords were looking at it like, man, I could have rented to each individual person. Instead, this kid was smart enough to say, yeah, I'll take on the whole thing and I'll rent it out myself. I'll assume the risk of maybe not being able to rent those out. The man behind the infamous ETF shorting Cathie Wood's flagship strategy is no longer in control of the fund after splitting from the firm he joined just 7 months ago. Interesting. Blue Line Moving CEO is on a mission to save thousands of dogs that have been abandoned at the border. Well, that was just some of the good news I needed to hear today, Tennis. That is very, very cool. Very, very cool. Something that's not talked about with the border issue. I know about it, and this isn't a new issue either, Tennis, and I'm sure you could vouch for this. I first heard about that kind of when I worked through the vet. There's always caravans kind of dogs that were misplaced at the border that would make their way all the way up here. Obviously now it's kind of a heightened thing but that's still amazing. Oh man. Grumpy old man says, "Are they border collies?" Uh, all right, 15 minutes, guys. 15 minutes, and then we got an hour and a half, and then JPOW does his Thanos, and we'll see what he does. But for now, exact same. So the NASDAQ and the Dow exactly inverse. NASDAQ up 0.41%, Dow Jones down 0.41%, S&P right there at that midline, down just 0.1%. Oh wow, that is awful. And I have friends that work both here on our borders, and friends that have worked down at the southern borders. And yes, not an easy job. Up here, very different. Our relationship with Canada, obviously, a much I don't know if I would say a much stabler relationship, but obviously the means of travel. We only have really Canadians coming south, and there we have no problems there. Obviously, when you say the southern border, people just assume Mexicans, which is very ignorant to just say that. Obviously, people come through that Mexican border, but it's not just it's a lot of Central American, South American. It's not just Mexicans that are trying to come through here. So you have a vast array of different kind of cultures colliding at that border, on top of all the stresses of I can only imagine what border agents see, and it has to be heartbreaking. It has to be heartbreaking, especially when you have to do your job and it may go against it's tough, because there's stuff that needs to be done that I'm sure nobody would want to have to do as part of their job. Hey, good morning, my lady. Good morning. Yes, I think we're finally starting to pull it all together, my lady. Finally starting to pull it all together. It's tough because for both me and Enzo, the monetization end of it wasn't a big deal. That wasn't what this was all about. And honestly, he pushed it more than me, not because he doesn't want a dime off of it. It's not that. It's he wants me, as was worded in another channel, to I don't want to misquote it, because I would hate to do that, but where I have I have my own priorities in life, and I'm handling them. Selfish priorities like putting food on my son's table and keeping a roof over my head. So for anybody out there that thinks that I was selfish and putting those priorities, I'll just let you know my son's priorities will always come before anything, anyone. And yeah. And if anyone wants to speak to my priorities, my phone is always on. Just saying. 10 minutes, guys. 10 minutes. And then we will break for a minute and again be back. I will probably try to have that all set up before I go to get Nikki. Again, it's tough timing because 1:20 to 1:30 on Wednesdays is when I typically leave to get them. But Alzheimer's drug breakthrough. lecanemab. The research breakthrough. So, the first drug to slow the destruction of the brain in Alzheimer's has been heralded as momentous. Excuse me, guys. Okay, BBC, can you give me one more ad? The research breakthrough ends decades of failure and shows a new era of drugs to treat Alzheimer's, the most common form of dementia, is possible. Yet the medicine, lecanemab, has only a small effect, and its impact on people's daily lives is debated. And the drug works in the early stages of the disease, so most would miss out without a revolution in spotting it. So there is some downside. I just don't like people talking shit, Junk Savvy. That's all that was. Not you. I just think people could be real about stuff, and but whatever. That's all. Ain't no thing. So what I like about this article here, Junk Savvy, is that they point out some of the challenges in it. They don't point it out as hey, this thing, buy this stock, it's going to go, you know what I mean? Obviously, because this isn't from a Wall Street Journal or something. Lecanemab attacks the sticky gunge called beta amyloid that builds up in the brains of people with Alzheimer's. For a medical field littered with duds, despair, and disappointment, some see these trial results as a triumphant turning point. Alzheimer's Research UK said the findings were momentous. One of the world's leading researchers behind the whole idea of targeting amyloid 30 years ago, Professor John Hardy, said it was historic and was optimistic. We're seeing the beginning of Alzheimer's therapies. It's a big deal because we've had a 100% failure rate for so long. So don't want to get too hopeful, because just like they said, they've had so many failures and covering the market. I've seen those firsthand. Time and time again, we get good clinical data, we get good this, and it kind of just fizzles out. Yeah, it's definitely hope. It's definitely hope, Junk Savvy. Appreciate you posting that. And those are, if any of you guys see anything like that, those are, I love articles like that, because too often, especially covering the stock market, I'm forced. Well, I'm not forced. I do it myself. That's the wrong word. But I look at it voluntarily from a stock perspective. You know what I mean? When we hear these clinical trials, it's given to me like a pitch. I always say news articles on any platform are like ads. They're trying to encourage me to either buy the stock or to lose confidence in the stock. Something like this, complete different kind of article. Addresses some of the challenges right off the jump, so it's not fluff. So well done, Junk Savvy. That's the kind of research that we need to know, because then even to take it into the stock level, now you can look at something that maybe has some real promise, instead of hearing some bullshit trial data that we get pushed out by us all the time. And Arctic Fox, that's the way it should be, man. Say you, say me, say it together. That's the way it should be. I'll be dancing on the ceiling. Yeah, I just didn't like it, Junk Savvy. I just didn't like it. I didn't like the top part, more of the context. Sorry, I'm just putting our conversation on blast, but it's all good. Hey, Gloria Alvarez. Hello from Lobo's mom. I just liked and subscribed. Well, I'll tell you what, I really appreciate that, Lobo's mom, but what I appreciate even more is the beautiful young man that you raised there. He is a very, very loved and appreciated member of this community, and it is truly our pleasure to meet you, Lobo's mom, aka Gloria Alvarez. Appreciate you. Man, is it just me, or is this music like a bootleg version of all real songs? Or have I just listened to too much music that every song I hear like a knockoff version of a real song? I don't know. All right, 4 minutes before trader lunch. And then an hour and a half from there, we got Mr. Jerome Say It Ain't So Powell. And we'll be bringing him to the big stage to see what he's got to say. But right now, we got the Dow down 0.45%. The S&P slipping back red a little bit here, down 0.08%. The NASDAQ still up here, leading the charge, up 0.3%. Still don't know about this WISA here. WISA. Li Auto holding those gains. So Li Auto, Lucid, all had this initial big pump. Lucid's wasn't as extreme, but still holding it. 992 up 1.5%. Then you got Neo giving some of it back, but still up 17% on the day. 1233 on Neo. Build-A-Bear, good old BBW, holding tough at 15% gains. And Cosmos continuing to get hammered on here today. Not out of lack of interest. So you got to wonder where does the boats get loaded and when do we see a little upwards pressure on this. Down now 28%, 55.6 cents. You think it's going to be JP? Show me the money. Why can't he be a showman? Like, I don't think there's anything in his contract that says he can't be a showman. Like, if he came out in a Willy Wonka outfit or, you know, something to just spice things up a little bit. Why not? Why not? Need more people to take chances. Need people that don't just do exactly what they're told day in, day out. Put that same stuffy suit and tie on and blah, 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 blah. If I'm JPOW, I'm going all out. It's 2022. I'm coming out. It's coming out, you know, last year, maybe a Santa outfit, something. All right, guys, 11:59, 30 seconds before. All we need is for him to smile. Oh, if he came out dressed as like dressed in the pimp suit, like what's his name? Dolomite, way down in the jungle deep. You know what I mean? Kieran, we're having a party, 9 a.m. 9 a.m. our time. You think you can make it? That's 9 a.m. I'm thinking a 2-1 USA victory, Kieran. You heard it here first. I'm thinking 2-1 USA. I think the Netherlands scores a late goal after trailing most of the game 2-0. And then I think there's going to be a controversial call down the stretch that's going to favor the U.S. Hot ones. Is it still the same? Like, I haven't watched any new ones. I remember when I used to work overnights, I watched a lot of those hot ones, Hills. ordered the hottest sauce from that show. Yeah, that's your first mistake. You don't do that. Have you seen some of the reactions out of people on that show? Oh, yeah, but Junk Savvy, the fact that you're still green on that and there's still this kind of volume. No, 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 Karen. Saturday morning. Saturday morning, Karen. Saturday morning. What if he did that though? What if when one of those shills asked a question, JPOW was just like, I got a rebuttal for that, and just walked over, put a little baby powder on the hand, and hit him with the, what did the five fingers say to the face? Bam! I mean, JPOW's got to be thinking about the next part of his career. And at this point, I would have to think he's done a lot. He's worked, he's accomplished a lot of what, his goals, this and that. If he doesn't want to be a famous influencer after, he's got to have dreams. Feels like I put my tongue on the wood stove. That's not a good feeling. Why would you want to do that? What I would be looking for today too, Junk Savvy, is going to be, if this continues, kind of holds up like this, I'll be looking to see if we get a big pop in the after hours on Cosmos. What if JPOW just came out and was like, well, I got some bad news, guys. The federal government, we had a lot of exposure in FTX, guys. Someone's got some splaining to do. It's just not me. I was told it was all good. We all know he's not going to do any of that. He's going to come out, throw buzzwords around. It'll be fun, though. It'll be interesting. All right, guys. I'm going to take a little break. Go check on my house. And we will be back for the launch of JPOW at 1:30. So stay tuned for that, guys. What shall we put up here? I don't think yet, unless they do it as like a Christmas thing. So here's what I was thinking, Kieran. If he does, maybe he comes out, maybe he does, let's revisit the JPOW in a Santa outfit. Maybe he does come out in a Santa outfit, tell us all we've been good boys and girls. Maybe if we did certain things, we've been good boys and girls. And what he's going to do personally, they're going to bless us with a little bit of stocking stuffers to get us going with that digital currency. Here you go. Here's Walmart vouchers, whatever. Yeah, Gary Gensler got some splaining to do. Hopefully he stays away from helicopters and tall buildings and things like that. Hills, good luck. Eat some bread. I don't know what you guys do to eat to cure hot sauce stuff in Canada. We eat bread and milk down here. I'm not sure how you do it, though. Peanut butter and jelly sandwiches work good, too. So do that. All right, guys. I will see y'all in a little bit. Thank you again for all the patience today as we continue to try to make this stream bigger and better. And we will get there. That is a guarantee. The spy back in the green. I will throw this spy up here for a little bit. But if anybody's watching anything and you want it up there, hit me up. You go lick the snow? Well, that could work. That could work. All right, Arctic Fox. All right, guys, I will see you in a little bit. Much love, guys.
Some of my fellow trustees are here in the audience today. It's my great pleasure to welcome all of you, both our post-pandemic in-person audience here, packed house, great to see, as well as our sizable broadcast and online audience. Thank you for joining us today. When President Obama named JPOW to the Federal Reserve Board as governor in 2012, no one, including I suspect Jay, expected him to become Fed chair. When President Trump named Jay Powell as the Federal Reserve Chairman in 2018, hardly anyone anticipated a global pandemic. And don't forget that then the Fed's challenge was too little, not too much inflation. So Jay Powell has repeatedly been forced to confront the unexpected and had to steer the United States economy through uncharted waters. He's done it with a steady hand, great personal integrity, independence, and an unwavering commitment to the Fed's dual mandate, price stability, and maximum sustainable employment, though I don't think I need to explain to any of you that today, despite stiff headwinds, both economic and political. So we're pleased to welcome to the stage today, on behalf of the Brookings Institution and the Hutchinson Center on Fiscal and Monetary Policy, Jay Powell. Following his remarks, Mr. Powell will field questions from David Wessel, the director of the Hutchinson Center, and from the audience. Jay, thank you for joining us.
Thank you, Glenn. It's great to be here today. It's great to be back at Brookings. So today I'm going to offer a progress report on the FOMC's efforts to restore price stability to the U.S. economy for the benefit of the American people. And that report must begin by acknowledging the reality that inflation remains far too high. My colleagues and I are acutely aware that high inflation is imposing significant hardship, straining budgets, and shrinking what paychecks will buy. This is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. We currently estimate that 12-month PCE inflation through October ran at 6.0%. While the October inflation data received so far showed a welcome surprise to the downside, these are a single month's data, which followed upside surprises over the previous 2 months. As Figure 1 makes clear, down months in the data have often been followed by renewed increases. It will take substantially more evidence to give comfort that inflation is actually declining, and by any standard, inflation remains far too high. For purposes of this discussion, I'll focus my comments on core PCE inflation, which omits the food and energy inflation components, which have been lower recently but can be quite volatile. Our inflation goal is for total inflation, of course, as food and energy prices matter a great deal for household budgets. But core inflation often gives a more accurate indicator of where overall inflation is heading. 12-month core PCE inflation stands at 5.0% in our October estimate, approximately where it stood last December when policy tightening was in its early stages. Over 2022, core inflation rose a few tenths above 5%, and it fell a few tenths below, but mainly it moved sideways. So when will inflation come down? I could answer this question by pointing to the inflation forecasts of private forecasters or of FOMC participants, which broadly show a significant decline over the next year. But forecasts have been predicting just such a decline for more than a year, while inflation has moved stubbornly sideways. The truth is that the path ahead for inflation remains highly uncertain. For now, let's put aside the forecasts and look instead to the macroeconomic conditions we think we need to see to bring inflation down to 2% over time. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. There's considerable uncertainty about what rate will be sufficient, although there's no doubt that we've made substantial progress, raising our target range for the federal funds rate by 375 basis points since March. As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections. I will return to policy at the end of my comments, but for now I'll simply say that we have more ground to cover. We're tightening the stance of policy in order to slow growth in aggregate demand. Slowing demand growth should allow supply to catch up with demand and restore the balance that will yield stable prices over time. Restoring that balance is likely to require a sustained period of below-trend growth. Last year, the ongoing reopening of the economy boosted real GDP growth to a very strong 5.7%. This year, GDP was roughly flat through the first 3 quarters, and indicators point to modest growth this quarter, which seems likely to bring the year in with very modest growth overall. Several Russia's war against Ukraine and our policy actions, which tightened financial conditions and are affecting economic activity, particularly in interest-sensitive sectors such as housing. So we can say that demand growth has slowed, and we expect that this growth will need to remain at a slower pace for a sustained period. Despite the tighter policy and slower growth over the past year, we have not seen clear progress on slowing inflation. To assess what it will take to get inflation down, it's useful to break core inflation into 3 component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services ex housing has fluctuated, but shown no clear trend. And I'll discuss each of these items in turn. Early in the pandemic, goods prices began rising rapidly as abnormally strong demand was met by pandemic-hampered supply. Reports from businesses and many indicators suggest that supply chain issues are now easing. Both fuel and non-fuel import prices have fallen in recent months, and indicators of prices paid by manufacturers have moved down. While 12-month core goods inflation remains elevated at 4.6%, it has fallen nearly 3 percentage points from earlier this year. It is far too early to declare goods inflation vanquished, but if current trends continue, goods prices should begin to exert downward pressure on overall inflation in coming months. Housing services inflation measures the rise in the price of all rents and the rise in the rental equivalent cost of owner-occupied housing. Unlike goods inflation, housing services inflation has continued to rise and now stands at 7.1% over the past 12 months. Housing inflation tends to lag other prices around inflation turning points, however, because of the slow rate at which the stock of rental leases turns over. The market rate on new leases is a timelier indicator of where overall housing will go over the next year or so. Measures of 12-month inflation in new leases rose to nearly 20% during the pandemic, but have been falling sharply since about mid-year. As Figure 3 shows, however, overall housing services inflation has continued to rise as existing leases turn over and jump in price to catch up with the higher level of rents for new leases. And this is likely to continue well into next year. But as long as new lease inflation keeps falling, we would expect housing services inflation to begin falling sometime next year. Indeed, a decline in this kind of inflation underlies most forecasts of declining inflation. Finally, we come to core services other than housing, and this spending category covers a wide range of services, from healthcare and education to haircuts and hospitality. This is the largest of our three categories, constituting more than half the core PCE index. Thus, this may be the most important category for understanding the future evolution of core inflation. Because wages make up the largest cost in delivering these services, the labor market holds the key to understanding inflation in this category. In the labor market, demand for workers far exceeds the supply of available workers, and nominal wages have been growing at a pace well above what would be consistent with 2% inflation over time. Thus, another condition we're looking for is the restoration of balance between supply and demand in the labor market. Signs of elevated labor market tightness emerged suddenly in mid-2021. The unemployment rate at the time was much higher than the 3.5% that had prevailed without major signs of tightness before the pandemic. Employment was still millions below its level on the eve of the pandemic. Looking back, we can see that a significant and persistent labor supply shortfall opened up during the pandemic, a shortfall that appears unlikely to fully close anytime soon. Comparing the current labor force with the Congressional Budget Office's pre-pandemic forecast of labor force growth reveals a current labor force shortfall of roughly 3.5 million people. This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall participation, however, remains well below pre-pandemic trends. Some of the participation gap reflects workers who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly. In addition, many older workers lost their jobs in the early stages of the pandemic when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers, given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people. The data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths during the pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain of the Fed. Our tools work principally on demand. And without advocating any particular policy, however, I will say that policy to support labor force participation could, over time, bring benefits to the workers who join the labor force and support overall economic growth. Such policies would take time to implement and have their effects. For the near term, a moderation of labor demand growth will be required to restore balance to the labor market. Currently, the unemployment rate is at 3.7%, near 50-year lows, and job openings exceed available workers by about 4 million. That is about 1.7 job openings for every person looking for work. So far, we've seen only tentative signs of a moderation in labor demand. With slower GDP growth this year, job gains have stepped down from more than 450,000 per month over the first 7 months of the year to about 290,000 per month over the past 3 months. But this job growth remains far in excess of the pace needed to accommodate population growth over time, about 100,000 per month by many estimates. Job openings have now fallen by about 1.5 million this year, but remain higher than at any time before the pandemic. Wage growth, too, shows only tentative signs of returning to balance. Some measures of wage growth have ticked down recently, but the declines are very modest so far relative to earlier increases and still leave wage growth well above levels consistent with 2% inflation over time. To be clear, strong wage growth is a good thing, but for wage growth to be sustainable, it needs to be consistent with 2% inflation. So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer-run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex-housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy. And I'll close by saying that we will stay the course until the job is done. Thank you.
Thank you very much, Chair Powell. I think you spared me the chore of asking you to pick between 50 and 75, so I won't have to ask you that. Thank you for your last paragraph. But I want to talk a little bit about wages and inflation. So, as you said, wages are rising faster than is consistent with a 2% inflation rate, assuming reasonable productivity. You said in November that wages are not the principal cause of prices going up. But for many workers, real wages have been falling lately. So I wonder, isn't there room for wages to rise a bit faster so workers can make up lost ground? And what level of wage increases do you think is consistent with a 2% inflation target?
Okay, so I guess I would start by saying that the inflation that we saw at the beginning of this episode back in March of 21 was not really related to wages at all. It was related to tightness in goods markets, largely due to supply chain issues. Over time, though, inflation has now spread broadly through the economy. And while I would still say that the inflation we're seeing now is not principally related to wages, we think that wage increases are probably going to be a very important part of the story going forward, particularly as it relates to that third category of core services ex housing. So we think it is an important thing going forward. And ultimately, in the service sector in particular, where wages and benefits are by far the largest cost, wages need to go up. And of course, we want wages to go up. We want wages to go up strongly, but they've got to go up at a level that is consistent with 2% inflation over time, making basic assumptions about productivity. So if you look at the principal wage measures that we look at, I would say that you're 1.5 or 2% above that with current wage increases. So particularly the employment compensation index and the average hourly earnings index. Look at those two. It's about 1.5% higher than what would be consistent, making various adjustments, including for productivity, from nominal wages. So, and as we look at the labor market today, including today's JOLTS data, what you see is a labor market that there's a real imbalance between supply and demand. There are 1.7 job openings for every unemployed worker, everyone looking for a job. The so-called jobs workers gap is about 4 million, meaning if you look at all of the available jobs, including people who are working, and then look at people who are in the labor force or are looking for a job, there's a 4 million shortfall. So you're in that world, and we think that there's a job for moderating demand in there and getting the labor force back into balance.
You don't think that there's a possibility that we should have a period of catch-up of wage increases above the sustainable level, and that businesses with relatively fat profit margins can absorb some of that without passing it through?
So that's the question of the worker share of profits and that kind of thing is not really related to this. Right now, people's wages are being eaten up by inflation. So what you want to do is you want to have inflation stable and then have a very strong labor market where the biggest wage gains are going to the people at the bottom end of the spectrum. And we had that at the end of the very long expansion that ended with the pandemic. That's not what we have now. Now, for most workers, the increases they're getting in wages are being eaten up by inflation. That's actually not true at the bottom end, where wage increases are higher than inflation. And that's a good thing. But if you want to have sustainable, strong labor market where real wages are going up right across the wage spectrum, especially for people at the lower end, you got to have price stability. And until we restore that, we can't get back to that place where we kind of were for the 2 years before the pandemic hit.
And did you take, when you looked at today's JOLTS data, which measures the vacancies and quit rates, did you find that encouraging?
More or less in line with expectations, but that's
going the right direction.
That's a good thing, right? Yeah. So I guess job openings came down by several 100,000 to where they are now, and yeah, that's a positive thing. As you know, the relationship between job openings and unemployment is a very fraught one, and job openings right now compared to unemployment are at their near their all-time high levels. So it has been our view that there's a possibility that in this highly unusual situation in the labor market could come back into balance to some extent through a decline in job openings, and that there's been a typical relationship between increasing unemployment and declining job openings, but that our thinking has been, and many labor economists share this, that you could get a decline in job openings that wouldn't produce the same increase in a smaller increase in unemployment than is typically the case looking back in history because of the very outsized level of job openings. And we've kind of seen that so far, but it's way too early to say that'll work.
Traditionally, the Fed looked at the unemployment rate as a measure of labor market tightness, and we've seen recently that may be misleading. Unemployment rate is still very low, and as you pointed out, job vacancies are starting to come down. But to the extent that the Fed still relies on a Phillips curve kind of relationship, going forward, is the natural rate of unemployment a useless concept? What measures will the Fed use to judge labor market slack as we look ahead to policy in the coming years?
I think the way we think about it, of course, the standard way to think about it is it's the gap between the actual unemployment rate and the natural rate of unemployment that matters, right? And the issue really, it's not that framework doesn't make sense. It does make sense. But the issue is that the natural rate of unemployment is very hard to identify with certainty, even in normal calm times. But when there's a violent disruption of the labor market, it can move very substantially. So, and that happened at the beginning of the pandemic. The labor market was very much disrupted, and we assumed that the natural rate had moved up, meaning that for any level of unemployment, the labor market is tighter. So we knew that. And I think what was different in this cycle was really that you had to look at things like job openings and quits and reservation wages and just wages overall to tell you that the natural rate of unemployment had really moved up quite a lot. But I don't think it's a problem with the framework, but it is a fact, though, that it's very hard to pin down where the natural rate of unemployment might be when there's this massive disruption in the labor market going on.
So do you think that the JOLTS data, the job vacancies per unemployed worker, that's going to be a lasting measure of labor market tightness for you at the Fed?
Yes, I think people will tend to look at it.
Well, when you tell them you're looking at it, they tend to look at it.
They'll look at it.
I've noticed that.
That's right. I think I would just say in this particular situation, we think it's important, and we're going to find out empirically whether that was true for the reasons I explained. We think that we can see a big decline in job openings and less than you would expect of an increase in unemployment. So this was a unique in so many different ways. Right. This series of events was different from one in particular is just that so much of the inflation was due to supply side constraints, right, which is not a feature of the U.S. economy for a long time.
Well, but Vice Chair Lael Brainerd said the other day in a speech that she raised the question of whether long-term changes of the economy, like labor supply, deglobalization, climate change, could reduce the elasticity of supply, and that this may be a problem going forward. Do you share that?
So this is a great set of questions that we've all been thinking about a lot, and Lael's speech was really terrific on that. Augustin Carstens has given a couple of speeches on the same topic, including one at Jackson Hole this year.
The head of the Bank for International Settlements.
Yes, exactly. The question is, is the new normal going to be unlike this normal that we've had where supply side disruptions and constraints were relatively, you could look through them. The lore has been for a long time that you don't need to worry about that. It'll sort itself out, a supply shock from oil prices or whatever. Are we going into a situation a little bit like the 70s where there will be ongoing repeat shocks, and which would tend to put more upward pressure on inflation over time? We don't really know. I mean, it's a great question. But the question, I guess the real question is, if that's true, what are the implications? We still have a 2% inflation target, and we still have to use our tools to achieve it and to keep inflation expectations anchored. But it's very hard to know. It's very hard to know the answers to these things. I mean, we tend to assume things will go back to the way they were just naturally, but that doesn't seem to be happening so far.
Right. Now, you mentioned in your remarks that forecasts of inflation have, not only those at the Board of Governors, but in the private sector as well, have been lousy. Inflation has not behaved the way the forecaster said. So I wonder how you think about using forecasts of inflation and making policy. If you can't tell us, or if your staff can't tell you with some degree of confidence what inflation is going to be 6, 12, 18, 24 months out, how do you think about that in deciding when you make policy decisions?
So I'll say that it is very difficult to forecast inflation now, and one of the reasons is just that the situation is so different from the normal one. And as I mentioned, a lot of it is just that the difficulty is just these supply side constraints that we've had. We had no experience in forecasting that. It was, this was a case of first impression. So that was very difficult. Nonetheless, we do make forecasts. We'll continue to make forecasts. The way I tried to get around that in my remarks was to say, let's put the forecast aside for a second and let's try to identify the macroeconomic conditions that we think we need to see that would put downward pressure on inflation. So that's a way to think about it. We'll continue to make forecasts, but we're going to have to be humble and skeptical about forecasts, I think, for some time. And that calls for a lot of risk management. And the other difficulty, of course, is that monetary policy works with long and variable lags, in particular inflation is at the end of that train. And so if you're waiting for actual evidence that inflation is coming down, it's very difficult not to over-tighten if that's all you're doing. So we have a risk management balance to strike, and we think that slowing down at this point is a good way to balance the risks of
slowing down on the pace of rate increase.
On the pace of rate hikes.
I see. But it's still a problem if you can't use today's economic conditions that you think are likely to generate more or less inflation. Is that basically?
Well, first of all, I'm agreeing that it's a very difficult situation in which to forecast inflation, and really very few professional forecasters have gotten it right. So I think we'll look at various things. We'll look at our forecasts. We'll look at the actual data. We'll look at, I gave you the three pieces and the elements of those three pieces of core inflation that we're looking at. We will, look at these macroeconomic conditions. For example, we will try to identify a level of a stance of policy that's sufficiently restrictive to bring inflation down. We can't identify that with great precision and confidence, but we'll look at the changes in financial conditions and the effects that those financial condition changes are having on the real economy. We'll look at all of those things and make a judgment, and it'll have to be judgment as to what that is.
Well, when you think you've talked frequently about the need to have policy restrictive, and that often is used as the definition of restrictive is above some neutral rate of interest, the one that will prevail when all is calm. And you gave a speech at Jackson Hole a number of years ago pointing out how identifying all these things, the natural rate of unemployment, the natural rate of interest, the problem is that we don't know what they are. So how will you know when policy is restrictive? How do you think about what the neutral rate is under the current conditions of the economy?
The answer to that is that there isn't any one perfect summary statistic. So the way I think about it, and I think the way we generally think about it, is we make our policy changes and they affect financial conditions. Actually, it works the other way around. Financial conditions tighten in expectation now, different from what it used to be. So they tighten. And so we monitor the tightening of financial conditions. We look at the history of these financial conditions index, and we ask how tight are financial conditions. We also look at the effect that tighter financial conditions are having on the real economy, particularly now interest-sensitive spending, but also other things as conditions tighten. We also look. So, what are the financial conditions we look at? We'll look at the entire rate curve. If you think about risk-free, the Treasury rate curve, we'll look to see significantly positive real rates across the curve, and you have that. You can argue about the short end, but you've got to pick some sort of a forward-looking reading for inflation, and I think inflation compensation in the markets definitely reflects confidence in us bringing down inflation. So you've got real rates really across the whole yield curve. You also look, though, at credit spreads and what are private companies borrowing at, because most borrowing doesn't happen at the federal funds rate. It happens in many other places. We look at asset prices. We look at exchange rates, which are just another asset price. We look at all those things, and we try to make a judgment about whether looking at, put some weight on the real interest rate curve, some weight on the other aspects I talked about. I think you have to make a judgment at the end, though, that you're restrictive.
So an estimate of the neutral rate of interest didn't seem to be one of the big factors in that list you gave?
No, it's in there. It's in there in looking at the real rate curve. So you look at the real rate curve, you'd want real rates to be above what we estimate as the longer run neutral rate. Mm-hmm. The issue is, the longer run neutral rate is a rate at a time of full employment and 2% inflation and the economy in perfect equilibrium. That isn't where we are.
Yeah, I noticed. Can I turn to the balance sheet for a minute? I'm going to turn to questions from the audience in a minute. What criteria are you going to use to decide when to end the shrinking of the balance sheet? Is it the economy? Is it whether money markets are functioning well? Is it whether the Treasury is having trouble raising money? How do you decide when you've shrunk enough, when you should end the shrinking?
So I should refer you to a document that lays all this out in detail that I really should be reading to you, but I'll paraphrase it.
Thank you.
If I don't get it exactly right.
No one will pay attention if you don't get it exactly right. Don't worry about it.
Pretty much wing it.
Relax.
So we're in an ample reserves regime, and what that means is that changes in the reserve level will generally not affect the federal funds rate. So there's more than enough reserves in the system. So we're not close to reserve scarcity. So what we said is that we would allow reserves to decline until we're somewhat above the level that we think is consistent with an ample reserve, with scarcity.
Right.
And then for a while, what you do is you hold the balance sheet constant, and non-reserve liabilities grow while reserves shrink. So we sort of shrink gradually down to that. And then at a certain point, we're just going to call it. We're not looking to really go back into proving that they're scarce, because what happens is, and you saw this back a few years, the demand for reserves is not stable, and it can move up and down very substantially. So we want to stop at a place that's safe. Having a lot of reserves in the system is really a good thing. It's really a public benefit to have plenty of reserves, plenty of liquidity in the markets and in the banking system and the financial system generally. So that's how we would do it.
In the minutes of the last FOMC meeting, it said the staff had a forecast that it forecasts below potential growth, but not a recession. But then there was this interesting sentence where the staff said the possibility that the economy would enter a recession sometime over the next year is almost as likely as their baseline forecast. Is that how you look at it?
So I have resisted the temptation to handicap it.
Go on.
I think I'll continue to do that. But I get the way I think about it is I do continue to believe that there's a path to a soft or a softish landing. I do believe that. And
the definition of a softish landing is what? Unemployment goes up a little, but we don't have a recession?
Yeah. Unemployment goes up, but it's not a hard landing. It's not a severe recession. You can think of unemployment going up, but not really spiking as it does in some recessions. So that's how I think about it. And I think the path is pretty clear. The labor market conditions soften. We see inflation, and the goods inflation gets better, housing services inflation gets better, and the labor market softens but doesn't go into recession, and you see inflation start to come down. And I think that's very plausible. I don't want to be the handicapper on it. And of course, our job is to try to achieve that. Mm-hmm. And I think it's still achievable. Although, if you look at the history, it's not a likely outcome, but I would just say this is a different set of circumstances.
Well, you said at the last press conference that you thought the path to that soft landing had narrowed. Has it continued to narrow, or is it widened? Or I don't know if you can have a wider soft landing, but
I don't know that it's changed since this is what, 5-6 weeks ago. Yeah. I was asked the question, has it narrowed? Is it still possible? And has it narrowed? I said, it's definitely still possible. And it has narrowed because if you look over the course of this year, nobody expected us to raise rates this much. No one expected inflation to be this strong and this persistent and this, to have spread so broadly through the economy. And so to the extent we need to keep rates higher or keep them higher longer, that's going to narrow the path to a soft landing. On the other hand, if we get good inflation data and we get evidence that all the things that I talked about, if all those things start to swing the other way, then we could very much achieve this.
In August 2020, you announced a new framework for monetary policy, the flexible average inflation targeting framework. And I wonder whether there's anything in that that you think we should be rethinking now in light of the recent experience?
So we said we would do another framework review in 5 years, and so that would be to bear fruit in 25 or 26. So that's what we're going to do. We're going to stick to that. I think we need to see this through a full cycle. We need to see the other side of inflation and what the economy looks like after this historic episode to really make good judgments about that. I will say, though, that aside from the framework itself, we implemented it through guidance of various kinds, and you know, we put in really strong guidance because there were a lot of doubters that we would ever achieve 2% inflation. If you remember, that was the main criticism. Little did we know. But one piece of guidance that we gave was, and I don't think this had anything to do with or much to do, let's say it that way. It didn't have much to do with all this inflation we're experiencing. But the one piece of guidance that we gave that I probably wouldn't do again was we said we wouldn't lift off until we saw both maximum employment and price stability. And I don't think I would do that again.
Because?
I think it limited it's the tail risk. You know, we tend as human beings to underestimate tail risk, and I think we didn't think it seemed so unlikely. If you remember, 25 years of low inflation,
right,
and many years after the pandemic, after the global financial crisis of inflation everywhere in the world, it's all disinflation. Just didn't seem likely, and yet here we are.
So it turns out that when you invite the chairman of the Federal Reserve to speak at Brookings, a lot of people email you questions. Most of them are questions I've already asked or questions that were so poorly framed that I couldn't even understand the question. But somebody asked me this one, and so I want to give that person an opportunity to get an answer. What do you like to do in the morning before you start work?
Work. No, I'm a super early person, and I read a bunch of newspapers and drink my coffee in peace, and then that's what I do.
And now that you're chair, do you still ride your bike to the Fed?
Some. I ride down. Well, I won't tell you where I ride, but I do.
Yeah.
I ride.
The security guys thank you for that.
They're like, no. Yeah.
Okay, so here's the deal. We're going to take questions from the audience. You need to wait for a microphone to get to you because we have a lot of people online. You need to say who you are, and you need to remember that this is not an opportunity for you to make a speech or tell the Fed what it should do. It should be a question. It should be short, and questions end with a question mark. So come down here. Want somebody, Joe, and then Jonathan?
Thank you. Joe Beaulieu from Brevin Howard. So you've spoken both about risk management considerations and the inherent danger of inflation becoming entrenched. So I was wondering, how much do risk management considerations suggest a terminal rate higher than would normally be expected to achieve your policy goals?
So I think there are a number of dimensions, and it wouldn't necessarily one of them would be potentially higher rate, but more I would think one risk management technique is to go slower, right? To go slower and feel your way a little bit to what we think is the right level. Another is to hold on longer at a high level, and not loosen policy too early. I don't want to over tighten. Certainly, my colleagues and I do not want to over tighten because I think that cutting rates is not something we want to do soon. So that's why we're slowing down and going to try to find our way to what that right level is. But theoretically, it's another dimension, but it's not. It wouldn't be my first choice.
Thanks, Jonathan.
Hi, thanks. Jonathan Pingle with UBS. So I had a question about the imbalance between labor supply and labor demand. One of the things that's a little obscured when we look at and discuss the labor force participation rate is there is a pronounced downward trend due to population aging. So when you think about realigning labor supply and labor demand, are FOMC officials hoping or expecting that participation really moved back up all the way to a pre-COVID peak? And related to that is, the follow-on question, how much of the realignment do you think needs to be done through restricting labor demand as opposed to the ability of supply to catch up?
So on labor force participation, I think it's useful to go back 10 years. And the forecast that mainstream labor economists had was that, and you're right, aging of the population leads to declining labor force participation. Notwithstanding that, labor force participation was in effect flat and a little bit up from 2013 to 2020, roughly. And that was because you had a strong, tight labor market. People were staying in the labor market longer than expected. That was really what it was. So our ability to predict is not perfect in this, except over long periods of time, you have an aging population, so you're probably going to have declining labor force participation. I don't think it's reasonable to expect that we get all the way back to where we were with labor force participation in 2020 at 63.7, I guess, population adjusted. I don't see that, but I wouldn't rule it out. And we're nowhere near that now. We're 1.5 points below that now. So the real question is, do we expect to see big chunks of labor force participation? I got to say, this year we've seen, in the aggregate, not much, and it's been very disappointing and a little bit surprising. So that's part of the story. The other part, as I mentioned, is population. Is that the labor force, a big part of the shortfall in the labor force is actually population as well as participation.
So given population trends, given that there's still some workers are clearly anxious about going to work during COVID, and given that immigration is well below the levels that were projected before the pandemic, does most of the balancing have to come on the demand side?
Well, I think for now, we have to assume that. That's why I talked about, supply side policies on labor, but although they're not for us to recommend or to answer questions about.
Noted, please.
So yeah, the answer is yeah. I mean, that's what I kind of said that in my speech. We have to do what it takes to restore balance in the labor market to get back to 2% inflation. And that's what we're doing. Really just by slowing job growth rather than putting people out of work.
Joe Gagnon.
Thank you. Joe Gagnon, Peterson Institute. Chair Powell, back in 2018, you gave a speech questioning the role of the so-called star variables that the Fed uses to navigate. And there was a possibility raised that maybe unemployment could fall well below what the staff thought the natural rate U star was, then without causing inflation. But then COVID came and turned everything around. And as you just said, one interpretation of COVID is that U star went way up and we were on the wrong side of it, which is inflationary. My question is, going forward, is it likely, do you think it's likely that things could reverse as the dust settles from COVID and we could end up back in that world where maybe we're on the other side of U star, we don't know it, it's hard to tell? What lessons did you learn from that period that got forgotten because of COVID, perhaps?
Well, unemployment went below so what we write down and what the staff writes down is a longer run U star, longer run estimate of the natural rate of unemployment. I guess one thing I would say is that during the course of a long, relatively gradual, so we only have one experience, right, to generalize from, but what I learned from that experience was long, relatively slow, not super fast expansion. You really saw the natural rate of unemployment, the shorter term natural rate, come way down. We had 3.5% unemployment with really little sign. Wages were just getting up to that level of productivity and 2% inflation. So we could be back in that place. I think we could certainly be back in that place. But what we've seen, it's another N=1 situation with the pandemic. It's also unique. I would also point out, though, we did see the inflation we saw at the beginning. We did have natural rate of unemployment go up probably significantly. But the original inflation we saw was not to do with the Phillips curve, with the labor Phillips curve. It was not to do with that. It was to do with goods more.
So I think another way to frame Joe's question is, I think a lot of us thought that the lesson we learned when unemployment fell very far and we didn't get inflation, that maybe over time, before you were in charge, the Fed was erred on the side of being too tight, that it was too worried about the unemployment rate falling. And I think the concern is that, will we fight the last war? And because of this experience, the Fed will be reluctant to experiment with a low rate of unemployment in the future.
I'd love to have that problem again. If we can get back to,
Okay, so you got like 3 years left in your term. Do you think you can pull this off in the next 3 years so we can run the N=2 experiment?
Absolutely. Yeah.
Claudia Sam?
Claudia Sam Consulting. So the question I had is, we've had unexpectedly fast and large rate increases this year, and that has pushed up the dollar relative to basically any currency in the world. We've seen likely more financial market instabilities. So the Federal Reserve's dual mandate is for the United States, and yet are you worried that a severe global recession or financial market turmoil would come back to make it harder for us to achieve the U.S. dual mandate? Thanks.
So we do, of course, look at global developments. We have a domestic mandate, of course, as every central bank does. But in this world, global financial markets and the global economy really matter for us. So we monitor all that very carefully. We really think, and my colleagues and I really think, that the best thing we can do for ourselves and for the global economy is to get inflation under control as quickly as possible. We don't think the world's going to be a better place if we take our time and inflation becomes entrenched and then we have to go in later. The evidence is that the employment costs of bringing inflation down only rise with delay. So at the same time, we don't want to do any more than we have to do, but we feel like as a risk management matter, we needed to do what we did and feel like we're now in a place, again, as I said, where we can slow down and try to reach that ultimate level.
But how much do you worry about, I think what Claudia's question implies is, we do something with rates, other people are forced to do things with rates, and that ends up spilling back to us and makes it harder for you to do it. So you have to take that possibility into consideration.
So we absolutely believe that we take that into consideration. The model's explicitly taken into consideration. Of course, they're not perfect. No one would say we do it perfectly, but we have a very large global model that we use for the global economy, and it absolutely takes into account what's happening with the real economy and monetary tightening and currency and all those things. It won't be perfect, but we do that. And we also sort of understand generally that there's a lot of research and things. People are talking about this a lot right now, that maybe the whole is bigger than the sum of the parts when it comes to tightening. Maybe it is, maybe it isn't, but we're aware of the risk of that. But again, I come back to look where we are. We've raised 375 basis points. Markets are working. I think we're now in a position where we're in a place where we really can get inflation under control, and unemployment's at 3.7%. So we haven't done. I don't regret getting to where we are, and I think broadly the world will be better off if we can get this over quickly.
Thanks, Julia. Julia, stand up so the mic can find you. And can you bring a mic down here for Oli?
Can I ask 2 questions?
If they're short.
Yeah, very short. So one question on the labor market is, how do you reconcile, the characterization of the labor market as very tight with the fact that wage growth isn't keeping up with inflation and the labor share of GDP really hasn't risen since 2020? And then second question is, how much credence or what kind of research do you rely on to think about the notion that a very tight labor market will lead firms to invest in and innovate and become more productive over time? Could that be a tailwind to productivity growth?
Okay, I wrote those down really fast. Now is the problem with reading my handwriting. So you asked about...
Well, the labor market is tight, but wages are not rising faster than inflation.
Okay.
And the labor share of GDP, which has been depressed for some time, hasn't really started to rise. So how do you put that into your thinking?
So naturally we understand that real wages are not going up for most people. But to me, that isn't that's true, but it's not really dispositive. I think the issue really is that it's one of salience, really. So at what point do people start saying, I need higher wages because my real wages are going down. You're giving me these 6% wage increases, but inflation is 7.7%. I need more of that. So we don't really know when that point is. But when you get to that point, you're in serious trouble. And we don't think we're at that point, but it can't be that we can go on for 5 years at very high levels of inflation and that it doesn't work its way into the wage and price setting process pretty quickly. So that's a serious concern. So on the second question, yes, no, I think we're seeing that. You know, you're seeing the service industries. You're going to see, this labor shortage that we have, as I mentioned, it doesn't look like it's going away anytime soon, and that's absolutely, I think, certain to lead to a lot of investment in technology and labor replacement technology where there isn't labor, and I think you'll see quite a bit of that, and could it be a dividend going down the road? I would think it'll have to be to provide the services that the public wants to buy.
Thanks, Mike Feroli, JP Morgan. So you spoke about going somewhat restrictive and then staying there for a long time. Why would you prefer that over a shock and awe approach that goes very restrictive but for a shorter period of time? And I ask that because there's some evidence that sacrifice ratios are lower in a more aggressive regime like that.
I think we've been pretty aggressive, I would say. No, I don't. I don't agree. I mean, we wouldn't, to just raise rates and try to crash the economy and then clean up afterward. I wouldn't take that approach at all. I think we're in a position where the right thing to do is to move really quickly as we have, and now slow down and get to that place where we think we need to be. And by the way, there's high uncertainty around that. We have a broad set of thoughts about where that destination might be, but we could be wrong. It can be higher than that, could even be lower than that. We'll have to see. But I think that's the right approach, and that's also the approach that it would allow us not to throw away the option value of upending a lot of lives, which we would do if we crashed the economy and we might get rid of inflation, but at very high human cost.
There's a question in the very back, a woman in front of the camera. Do you want to stand up? Thanks.
Thank you so much for seeing me in the back here. Nancy Marshall-Genzer from Marketplace. Just wondering, Chair Powell, is the Fed in danger of neglecting its maximum employment mandate? Is the maximum employment mandate taking a back seat to the stable prices or inflation mandate?
No, absolutely not. Absolutely not. The thing is this: without stable prices, we can't have maximum employment, and that's how I think about it, and I think my colleagues as well. In the sense that if you're constantly fighting off inflation and having these battles and having to raise rates, and it goes on for 5 or 10 years as it can, you're not going to have maximum employment. The situation we would love is to have another one of these very long expansions, and we've had 4 of them now in the last several decades. Really, when inflation was low after the 70s, we got out of the habit of these short inflation-driven business cycles, and we were able to reach, you saw where we were 3.5% unemployment. Those are really good for, very beneficial to our society to have these long expansions, and the benefits start to go to people at the lower end of the spectrum in the 7th or 8th year in the last cycle. So I think the two things go together. Right now, the labor market is incredibly strong. Again, before this thing, we've never had 1.7 job openings for every unemployed person. So this is a great labor market in that sense. It's too great in a way because it's going to be adding to inflation.
Time for one more. In the back, the gentleman on the aisle. All right, 2 questions. 2 gentlemen on the aisle. Keep them short.
Thank you. I'm Orange Wang from South China Morning Post of Hong Kong. So I would just like to ask a question related with Chinese economy. So right now, a lot of analysts are arguing or believe that China's zero COVID policy is continuing to take a toll on the Chinese economy, but also likely to weigh on the global economy due to the size of China's market and its position in the global supply chain. So we're just wondering about what impact or how much impact do you accept that continuously slowing Chinese economy would have on the U.S. economy or the Fed's next interest rate moves? And is China's current economic situation a disinflationary factor or a inflationary factor to the U.S.? Thanks.
I guess I just say that to the extent China's having shutdowns in the parts of the country and the parts of the economy that are deeply connected to global supply chains, that's going to make those supply chains less efficient, less effective, and so that will have an effect on the prices of some of these goods that are manufactured or assembled in China. So it does have an implication for the U.S. It's hard to say how big that will be without knowing how persistent, how long these lockdowns take place for.
The gentleman behind you.
Thank you. Evgeny Shego with Public Citizen. I was wondering how you think about the trade-off of restrictive policy and the supply constraints you mentioned. So in particularly when it has a negative effect, say, on housing production that makes it harder to meet housing demand, or on the congressional investment through the Inflation Reduction Act in climate change mitigation and in energy policy that will make energy cheaper long term. How do you think about that trade-off?
Yeah, I don't think our restrictive policy would have much of an effect on the sort of climate mitigation investments you're talking about. In terms of housing, there are two things. One, there's sort of a longer run housing shortage that we have. But in the meantime, we had coming out of the pandemic, rates were very low. People wanted to buy houses. They wanted to get out of the cities and buy houses in the suburbs because of COVID. And so you really had a housing bubble. You had housing prices going up at very unsustainable levels and overheating and that kind of thing. So now the housing market's going to go through the other side of that and hopefully come out in a better place between supply and demand. But none of this really affects the longer run issue, which is that we've got a built up country and it's hard to get zoning, it's hard to get housing built in sufficient quantities to meet the public's demand.
So I want to thank you, Chair Powell, for being generous with your time, and thank you all for coming in. I want to appreciate everybody asked a short question, which that's the first time in my experience in 8 years in Brookings that's happened. I'd like it for all of you to stay in your seats for a minute till the chairman can leave safely. And if you have paper at the coffee cups or something, take them to the back of the room and dispose of them. So thank you very much.
What's up, guys? Just Do. Good to see you, Just Do. I had to jump back on. I am going to be back. I'm going to be out for a second. Good news. The rain stopped. Bad news. It's turned into hail. But I'm going to try to get out on my roof and see if I can find where these leaks are coming from. But seeing my man Just Doing here. What do you guys think of JPOW? The market obviously liked it. What are we up here? You've got the Dow Jones. So the Dow, everything went inverse, right? The NASDAQ was down all day. The Dow was right around up. The S&P was right in the middle. Completely flipped right before JPOW started talking, which was crazy that it started about 5 minutes before he started talking. The SPY just started ripping. I don't think it was anything new, anything we didn't know. I would say now the market's definitely pricing in 0.5%, something like that. You know where we bees, Just Do. You know where we bees. You got to get in that Discord, man. We've been playing some poker, playing some Call of Duty. And you're somebody I'd like to play some Halo with. Not a lot of people enjoy Halo nowadays, but I've been jamming that Halo co-op campaign. Pretty dope. There you go, Grumpy. Grumpy released his IMPP. Luckily, there's still some reserves in the tank. And yes, family is everything. I'm very happy for you. That made my day. That was the best news I got all day, Just Do. Getting to spend the holidays with your family. That's what it's all about. None of your business. What's up, Mr. Business? How you doing, my friend? How's everybody feeling? Hey, you know I got a spot for you whenever, my friend. Whenever you want. We're using some filler music, Just Do, so don't judge us. This is just until the good stuff gets here. Yeah, it's pretty dope. It's a little bit different than the past ones. It's more of a open world type thing. You got to do the first couple missions like in sequence, and then from there it kind of turns into almost like Destiny a little bit. But yeah, it's dope. It's dope. We need to get on that. You need to grab that new Warzone. Caesar C be out there wrecking cats. Caesar, you are nasty at the Call of Duty, and you do it real quietly. Not gonna lie, most people that are any good at Call of Duty run their mouths the whole time. Not gonna mention any names. But Caesar just quietly dominates. Okay, Lobo, I see you. Put that sandwich down, Lobo. Get to it. And a 1, and a 2, and a 1, and a 2. We can jazzercise. I get it going. It's been a long day, guys. I'm sorry. It's been a long day. I woke up to a rain in my kitchen. Yeah, that's the same thing that happened to me. Yeah, the DMZ thing is cool. It almost put me to sleep last night, but it was because I had a long day. But yeah, me, Caesar, and Enzo played a little bit of that DMZ last night. What we want to get, Just Do, is we want to get enough people so we could just have some private games. And we'll get there. And what is this Glass Onion thing I'm hearing about? Is this a new Netflix show, new Netflix movie? Because that same place that I don't know if that was the same place JPOW was just talking, but this Netflix CEO looks like a giddy little schoolgirl over there talking about all this new stuff. And I heard something about glass onions. I don't know what it is. Can somebody explain that to me? It's not too bad, Lobo. The bad part is I have to find out where it's coming from. Because I've got an archway like this, okay? Say this is the archway. My roof goes like this, and then my other roof is here. And where it's dripping is right at this point, but it's dripping inside the wall. So my archway, it's dripping off of it. My walls aren't wet at all. So I got to figure out where it's coming from. I'm thinking it might be something on my roof. From the sideways rain and the wind. So that's why I'm going to try to go out there now while it's not raining sideways. Up on the roof. And I don't know where this market's going. But it's cooking. 402.97 on the SPY. Are meme stocks getting any love? Nope. Look at that. Ape down at all-time lows. It's actually a good thing that Adam Aaron didn't push too much stock into there too quickly. We wouldn't want to tank the stock at all. So well done on his part. GameStop up 0.75%, 25.78. AMC at 722. So look at that, guys. We got another battle at 801 and we didn't even know it. 811, 812 right now, the total on AMC and Ape. I can't call it. Oh, this guy's excited by Twitter, Netflix CEO. He is so giddy. Man, I want to be Netflix CEO today. Reed Hastings is just... he is beside himself. I mean, wow. Oh, he's saying now resisting ads was a mistake. Yeah, I bet it was. The Netflix is cooking. Netflix up almost 9%. Oh, he's showing a little bit of regret. He wanted to buy Wordle. I didn't know Netflix was interested in Wordle. So... there's that. Oh, you know what would look good right now? So there's the heat map. This is still before JPOW talked. This was earlier today. And look at it now, just like magic. JPOW can do magic. He turned everything green. Except for financials, a little bit of mixed bag there, a little bit of red. Everything else cooking. Recession isn't going to be that bad. Consumer, blah, 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 blah. Everything's good, guys. Nothing to see here. Economy's good. Go out and spend money you don't have on Christmas. That's what JPOW is telling us. So be sure to do that. All right, guys. It's 2:53. Give me about 10 minutes. Maybe 15. Get out on this roof real quick, only because I don't want this rain to start again while it's just hailing out there. I want to try to see if I can figure out what's wrong with it. So wish me luck. I will be back as soon as humanly possible, and we will finish this day strong. Again, apologize for the interruptions and stuff today. Been a tough time schedule, but we live to fight another day. I get this ape off here, though. Don't want to make you guys look at that. Although I see Tiny Boxes is like, you want to scare me? You want to scare me with some 90-cent ape? I'll buy some more. I do it myself. I got this. All my training as a kid just do. All the times I watch Karate Kid movies, things like that, have prepared me for this day. So I go out on the roof, I think of, you know what I mean? Wax on, wax off, things like that. Yeah, I'm going to try. I'm gonna try. I'm gonna try, Nunya. I can't make any guarantees. It's not that high. I used to sneak out of that same roof when I was a kid, so if I fall, it shouldn't hurt that bad. And luckily, there's a swimming pool in my backyard right now with all this water. So, all right, guys, I will be here. I'm gonna put the spy up. I'll jump this to full screen. Yeah, I will be back in just a few minutes. Talk amongst yourselves. Be good. I'll try, Tiny. If not, I'll have Nikki come out with the video camera. If something bad does happen, at least you guys will get to get a laugh out of it. All right, I'll see you guys in just a few minutes. All right, guys, I'm back for a second. I need to go get some dry clothes on, though. I just didn't want you guys to think I left you. The market absolutely cooking still. So we got the S&P up 2.45% now. The NASDAQ up 3.57%. The Dow Jones up 1.6. Saucy Fredo, congrats. You got those TQ calls. Loving life. Loving life. I got a few SPY calls that are going through the roof right now. They don't expire till Friday. So I'm not sure what I'm going to do with them. But I had SPY puts, sold one earlier, kept one. It's worth nothing now. So I was not able to find the problem either on the roof. So I need to get back out there, but all right. Let's check this heat map real quick. See a bunch of green. I like to see green. So not a lot of red to be found here. PXD, Pioneer Natural Resources, one of the few brighter reds. HRL, Hormel Foods, some bad chili. Other than that, not a lot of red on the board, which is a good thing. Which is a good thing, you know. Some of the runners from earlier, Lee Auto. Still cruising along, 22.87, up 23.5% on Lee Auto. Lucid up 4%, back over that $10 mark. D-Lo continuing to run. Martin Apollo, D-Lo 1446. Look like a nice Nessie there. Neo, another one, holding ground all day, 1274 on Neo. Cosmos. So after that big dip all the way down to 53.5 cents, Cosmos back up at 63 cents, still down 18% on the day. Look at that volume though, 133 million trades. No dice on the roof. Not yet. I don't know. I don't even know what I'm looking for, Lobo. I'll figure it out, though. I always do. Oh, GTA, what did you bet the exact score? 2-0? Well, luckily in soccer, they don't have, like, empty net goals and stuff like they do in hockey. So hopefully that stays for you, brother. So already on the mainstream media, all these people that said this morning that this wouldn't happen, all these people this morning, wow, there's just not enough data, JPOW. Now they're all, see, I told, we knew this was going to happen. We knew. Yeah, well, if you knew, you didn't tell us, you jerks. Exact score first and second half. You got the exact score 0-0, and then you got 2-0. Well, I would have probably concurred with that. I would have went with that same kind of thing. But the bigger question, why is CEI going red? Look at this. Perfect buying opportunities, right, GTA? 10.8 cents on CEI. GameStop holding a little bit of green. Did Ape dip below that? So right at the 52-week all-time low for Ape, 90 cents even. Will it break that low? Will it rebound and go back higher? We'll never tell. Mullen, another one, hit a new 52-week low earlier, dropped all the way to 18.09 cents. Looking good there, Mullen. Looking good. Well, the thing with Mr. Furley is he wasn't really a go-getter. He wasn't really a go-getter, Mr. Furley. Um, he was kind of just look the other way kind of guy. Mr. Roper, on the other hand, Roper was on top of things. Roper didn't fall for Jack's silly games. You know what I mean? He knew what was good. And I think Mr. Roper and Larry did a little bit more on the side. If this is the same Furley you're speaking of, Lobo, I'm not sure if that's the same Furley. I only know one Mr. Furley. All right, hold on. One quick second, guys. Be right back. All right, guys. Sorry about that. Baby mama drama. But I'm back here for the end. We got 5 minutes left. Sorry about today. It's just been one thing after another. Been one thing after another. Hope you guys are doing good, though. Market's still cooking. Dow up 1.9%, S&P up 2.88%, and the NASDAQ up 4.2%. GameStop trying to make a little late rally here, 26.14 up 2%. What's that Tesla doing? Tesla, holy guacamole. 194.22. Yeah, you know the feeling, Grumpy? I used to live in a term where I'm on my way, I'll be there in 2 minutes, means I'll be there in 2 minutes, not, hey, sit around like an idiot for a half hour. What's that Rivian doing? Oh, slow down, Rivian. Slow down. 32.12 on Rivian. Arctic Fox's portfolio, nice and bright green today. Neo at 12.68. Look at this D-Lo. I want to know where my man Martin Apollo at. I'm thinking D-Lo might get a little run here in the after hours. Did it finish, GTA? That's awesome, brother. Awesome, man. Congratulations. Very, very cool. I'm gonna do the same thing. I already told you the score for Saturday morning. If any of you guys want to take, it's not financial advice, but it could be some gambling advice. 2-1 USA prevails over the Netherlands. Let's friggin' go. Nice. Attaboy, GTA. Good for you, brother. Good for you. Awesome. Well done, my friend. Well done. What is that ape doing? Oh, looky. Oh, I'm sorry, ape. Was that the expensive ape? 95.8 cents. So did you get any of that dip, Tiny? We were sitting down at 90 cents. Never broke below it, though. Never broke below that 90-cent mark. Beautiful, Arctic Fox. And I don't know how this continues to play out. I mean, JPOW talked pretty soft. You know, we got revised GDP data that was good. Now, where does the jobs report play in on Friday? Because wouldn't you think a good jobs report puts the pressure back on JPOW? A bad jobs report we celebrate, right? Is that how it's gonna be? I don't really know what we're hoping for on Friday with the jobs report. Yeah, I think they're going to get one goal. It's probably going to be controversial. The Netherlands likes to play a little dirty from what I've seen. Maybe a ball tap or something. But I think they'll get one. Probably under review later, they might take it away. But I think as far as betting goes, it'll hold. All right, guys, 1 minute. Not even 10 seconds. I don't always say this, but this day can't end fast enough. It can't end fast enough. And there's the bell, guys. There is the bell. The final stats on the day. The S&P finished up 3%. I got a $12 call that's up 881% right now. which is only $112 from $10, but still. All right, guys. Normally I like to stick around, but I gotta go handle some stuff with Nikki, and not gonna lie, he's going with his ma, and DoorDash is paying an extra $8 per delivery tonight. So I'm gonna go do that for a little while, make some money. But you guys all have a fantastic. Yeah, that last 2 minutes, pretty wild, Tiny, pretty wild. And hopefully that's a sign of things to come tomorrow. But I think there'll be some poker going on in the Discord. I don't know if I'll be back in time for it. I'll probably join maybe a little later. But that should be going on tonight, hopefully. So everybody have a great night. I got roofs to fix. There's not really much I can do about that right now, but got to go do some things. Yeah, he's good. He's good, Tiny. You know how the drama goes. All right, guys. Much love. Thank you guys again for all the patience. Hopefully tomorrow I don't wake up to it raining in the kitchen and we can do it bigger and better. But for now, thank you again for everything, guys. I will either talk to some of you guys later tonight, or if not, I will see y'all first thing in the morning. Much love, guys.